Good morning, everybody. Welcome back to another episode of The Market Open. It is Wednesday, January 22nd, 8:46 a.m. Eastern Standard Time. And we got a lot to talk about on another episode of The Market Open. Good morning to everybody. We are officially underway with big tech earnings. And yesterday kicked it off with Netflix, which I don't even know if crushed expectations is the right word, smashed expectations, demolished expectations. There's a lot of implications for how Netflix performed, and I think this is the reason why, at least in part, we got the entire pre-markets that are pumping. But we're going to talk about Netflix and sort of what they did to set the tone for big tech Q4 earnings. On top of that, you got Trump, Sam Altman, Larry Ellison, and Masa-san from SoftBank that are committing $500 billion and the inevitable byproduct of 100,000 new jobs in the United States of America when it comes to AI infrastructure. So that headline alone, if you don't even know anything about the headline, and we're going to go deeper into it later, but 500 billion AI spend. There's a reason why NVIDIA is hitting 145 right now in the pre-market, because it's like, all right, if we're going to spend $500 billion on more CapEx, I mean, I don't know, 50% of that 500 billion is going to NVIDIA, even if it's only 20% going into NVIDIA. It's just the amount of bullish sentiment across the entire market in regards to companies that are performing on earnings, in regards to that 10-year that continues to be below 4.6%, which it is this morning, which is very nice, in regards to new AI investments that are continuing to prove the large caps will continue getting larger. It's here. The sentiment's here. We are not even done with January yet. It does feel like animal spirits, risk on appetite. Obviously, Bitcoin at 106,000. It is very, very strong. And so far, cash on the sidelines has been the worst option this year. Now, being in the market necessarily hasn't been the best option in terms of just the indices, even though S&P is about to hit an all-time high, or it's very close to that in the pre-market. But if you've been in individual stocks, for example, Rocket Lab up 30% yesterday, it has proved that cash on the sidelines, at least so far, has not been the best option. So we got a lot to get into, a lot to talk about. We got some news on TikTok, all this different stuff coming out. Trump finally addressed the meme coin. And so we'll get into all of that here later today. Good morning. Thank you, everybody, for being here today. Andy, what's up? Carolyn, what's up? Gene, good morning. Good morning to you. Jody, Krupa, Jasmine, Oracle. Oracle's also up 6%. That's a big deal. We'll talk more about them. Wick, good morning. Autumn Soul, Jay Roberts, Eamon. Tesla is down. I think I'm probably going to be buying some Tesla today, dude. Like, at this point, it's getting, I don't know. We'll see. Tesla's the only one that's kind of not benefiting from all this bullishness. And granted, it is up for the year, and it's up from that 380 level that it was at a couple weeks ago. But it's not been benefiting over the past couple of days. Doug, what's up? I'm Beneficial. Maddie, good morning. Cindy, Anata, Roberto, Jeffrey. We will definitely be having that intro starting on Monday. I know that delay is super annoying in the beginning of the stream, so we will get an intro that'll actually play for like 30 seconds so that as soon as you guys enter into the stream, it starts with the good morning versus starting in the middle of me like getting into the intro. So we will definitely have something that is intro worthy. I just got to figure out what's a good jingle. What's a good jingle to make this happen, but we're going to figure it out. Admin Nursing Care, thank you for becoming a channel member. I appreciate that. Thank you for becoming a channel member. Good morning, Martin. Good morning. I'm Beneficial. Cash, Sebastian, William, Jersey Guido. What's up? Jason, Mila, Kevin, Player One, Julie Law, Colin, Phil Perry. What's up? David. Good morning to everybody. Thank you for being here. All right, let's get started. I think we got to start off with Netflix. Now, Netflix has been a name that I've been wrong on forever. And I was wrong on it again, even yesterday, right before earnings. I was like, I don't know. It's already at 890. Like, it kind of feels like it's up there, right? And then, boy, was I wrong, because in 5 minutes or 15 minutes after I said that, Netflix goes to the moon. Literally, Netflix goes to the moon. I believe it has hit an all-time high officially in the pre-markets. $1,000 a share. Right now, it's at $998. It was at $1,006. Ironically, when I was doing the market close last night, I didn't notice that I got a text message. And I had a friend text me, and that friend bought 11,100 shares, 11111, of Netflix at $870. It was not Derek. Before you guys say it was Derek, it was not Derek. Derek is ballsy, but I don't know if he's that ballsy to buy $10 million worth of Netflix at 3:57 p.m. And he was up 1.5 million last night. So, I mean, like, Netflix just absolutely crushed earnings. And why did they crush earnings? Well, it's pretty simple. Street expected 9 million new paid subs. Netflix added 19 million new paid subs. I mean, dude, when you beat from that perspective, it's hard to it's hard to be bearish, and I think there's implications on the rest of the economy that we'll talk about. But in general, I could never have even got bullish enough on Netflix to buy a share or 2 shares of Netflix, because I would have never predicted 19 million paid subs. Like, I could have never predicted that. So for those that did see the potential of that happening, and it kind of makes sense now in hindsight, which it always makes sense in hindsight, but you had Jake Paul, you had Squid Games 2, which Netflix says is on track to be one of their most watched series ever, even though I didn't like Squid Games 2. I thought it wasn't as good as it could have been. And then you had the movie on Christmas that I'm forgetting the name of, The Come Up or something like that. I forgot the name of the movie. And then obviously the NFL football games and WWE Raw live sports. You got all these catalysts that made it obvious in hindsight that people probably would subscribe to Netflix. And it turned out to be true. 19 million paid new subs, 50% net income growth. They did $1.8 billion of profits. Last year, at this time, they did $950 million of profits. And then they're guiding for 33% net income growth, $2.4 billion of profits, not year over year, but quarter over quarter. So that net income number is going to be pretty substantial if you compare it from Q4 2024 to Q1 2025, but still absolutely incredible growth for Netflix. And they did it. They absolutely did it. Shout out to Doug. We had our 2024 stock award show, and we said, "What's your sleeper?" And Doug said Netflix. He thinks he thought the operating margins were going to go up. The operating margins have gone up to now 29%, up from I think 24%. And so Netflix is absolutely flexing on the world in terms of their ability to show massive growth. Now, what does this mean for people that are not in Netflix? I think it means 2 things. Number one, it is very bullish for the consumer. Why is it bullish for the consumer? Because 19 million people have disposable income to pay for Netflix, which means, in my opinion, the consumer's healthy. Now, I know the pushback immediately is going to be, well, not all of those 19 million people are in the United States. A lot of those people are in India. They're paying like $5 a month instead of $15 a month. I get it. But there's 2 pushbacks to that pushback. Number one, Netflix is raising their prices. They announced yesterday. So the most premium tier is going to be $25 a month in the United States, which is insane. I don't think I would ever pay that much for it, but a lot of people love Netflix. And then I think the lower premium tier is going to be $18 a month, which is up a couple bucks. And then the advertising tier, I think it went up $1 or $2. So they're raising prices on their most profitable consumers in North America, that most of them are probably not going to cancel Netflix. So that's going to increase top line revenue growth. And number 2, it doesn't matter if they only got some random person in India or Indonesia to pay a couple bucks a month and they're not getting the full 15. The fact is they got them stuck onto the ecosystem. And the value of just getting them into Netflix, and eventually they're going to do what they did in the United States, which is raise prices across the world once they have the pricing power to feel comfortable to do that in different geographies. And that's what the street's paying for in terms of growth. So from that perspective, I do think it shows that the consumer is healthy. I mean, the fact that people are even willing to say, all right, I'm going to take some of my money outside of my paycheck, even though we are, hearing all these things about credit, et cetera, and put it into a luxurious product like Netflix, almost as if they need to have it. It shows that the content is so good, even if I'm not the biggest fan of Netflix content. And it shows that the original content they're creating is able to be profitably created, which is the problem with Disney Plus, HBO Max, et cetera. They can't profitably create content. Netflix can. That's the difference. Netflix can. Rodney says, I was a subscriber since 2008 when it was only DVDs. I canceled when they cracked down on password sharing and hiked prices around the same time. Yeah, and a lot of people did. But a lot of people also didn't, right? So there were people that were just like angry about the hiking of the prices, getting rid of the password sharing, all that stuff, and they canceled. But the content was good enough, whether it comes to Squid Games 2 or Jake Paul, whatever it is that got people sucked into the ecosystem. And that was able to get them to overcome a lot of the churn that they had 2 quarters ago, which, credit to Netflix, they were able to figure out the content. And if they were able to figure out the content, that is what helped them in a pretty substantial way. 30 and a Wake Up says Netflix is the Coke of entertainment. It's everywhere. I agree. And they're profitable. They're actually able to do it profitably. Now, the second implication on Netflix, even if you are not a shareholder outside of the consumer, Netflix runs on AWS. AWS is their cloud computing partner to be able to handle all the content that is stored on Netflix. So the more people that are watching it, I don't know if that exactly means they're going to pay AWS more money. They probably have deals with AWS and, they have different negotiations. But the point is there's more demand writ large for cloud computing, AKA the hyperscalers. And so from that perspective, I don't think we should see Amazon miss their numbers if Netflix is beating their numbers by such a wide margin, especially when Amazon's only expected to grow, 18 to 20%, whereas Netflix was expected to really put up the numbers when it comes to subscribers, and they beat that by 100%. So Look, from that perspective, I think it's just very, very bullish. It is a great way to start off tech earnings, even if you don't own the stock, which I know kind of sucks right now, seeing this thing up 15%. Everyone has a little bit of FOMO. But nonetheless, if you weren't in the Netflix story, you weren't in the Netflix story. But what other stories that you're into, it's very important that Netflix kicks off tech earnings in a way that makes the market feel very, very comfortable with the fact that there is more room for margin expansion and PE expansion. And that's what we need in the context of Netflix. Joseph Carlson, goated on this move, dude. He is the only YouTuber I know that was like bullish on this company. Pretty much no one else on this platform on YouTube has been that bullish on Netflix. He was. So credit to him. Credit where credit is due. You call a name and you stay bullish on it for a while. The one person that's got to be feeling sick about this is Bill Ackman. I love Bill Ackman, but dude, again, I said this a couple days ago, but if Bill Ackman had stuck with Netflix when it fell damn near 70% to like 168, I think was the bottom in 2022, and he just doubled down on that. By the way, his average was 300, so it's not like he was down 70%. He was down 50%, which sucks, but everyone was down in 2022. If he had doubled down on that and rode it back to the top, that would have been a goated move on Netflix. But he didn't do it, and that's why investing is hard. Even for the biggest people in the world that have all the information, all the research analysts, investing is hard. So shout out to Netflix, really setting up big tech earnings to go in a good way, and it looks like we're going to be seeing a lot more momentum from that company in the future. All right, let's move on to AI. So why is NVIDIA up right now, 3% in the pre-markets? Why is Palantir? Is Palantir still holding the gains from after hours? Yes, 2.35%. So Palantir's up and NVIDIA's up. Some of the other AI names are up. All the semis are up, by the way. SMCI is up 5.29%. TSM is up. NVIDIA's up 3.3%. I did buy 100 shares of NVIDIA yesterday. So for those that didn't catch the news, I bought Google yesterday. I bought 2 in the money call options for 150 that I'm going to be exercising in January of 2026. I bought 2 190 Amazon call options I'll be exercising in January of 2026. And then NVIDIA, I bought 100 shares flat out of NVIDIA at 139. So deployed about $40,000 of capital into the market yesterday and kind of finally got into the Max 7. By the way, I'm thinking of buying Meta. I'm just saying, screw it. I've wanted to own Meta forever. At this point, it's I'll DCA into it, but it is what it is. I want to own these names, and then I'll probably be buying a little bit more Tesla soon as well. But NVIDIA's up right now 3.2% because on the same day of the Netflix earnings, Trump decides that he's going to get all these world leaders together, and they're going to put $500 billion freaking dollars into something called Operation Stargate. So this is what OpenAI said about this. Let me just share this right here. And we're going to read through this. There is some controversy around if this is actually like possible to have $500 billion on it. Elon doesn't really believe they have the money, which is very interesting, but we'll talk about that in a bit. So right here, the Stargate project. The Stargate project is a new company which intends to invest $500 billion over the next 4 years building AI infrastructure for OpenAI in the United States. So literally for OpenAI, meaning, this is why people think OpenAI is going to $1 trillion, because they just have so much. I mean, quite literally, Sam Altman raised $500 billion last night. And the implications of that are going to be pretty massive in a variety of ways, especially as they try to build out GPT-15 whenever they get there. We will begin deploying $100 billion immediately. The infrastructure will secure American leadership in AI, create hundreds of thousands of American jobs, and generate massive economic benefit for the entire world. This project will not only support the reindustrialization of the United States, but also provide a strategic capability to protect the national security of America and its allies, aka if America is the best with AI, aka OpenAI, then we will have a lead against China and Russia. The initial equity funders in Stargate are SoftBank, OpenAI, Oracle, and MGX. I don't know how the hell OpenAI has any money to fund this because they lose $5 billion a year. SoftBank does have money. Oracle does have money. MGX probably has some money. But in general, not sure how OpenAI is going to be participating in the equity funding of this. SoftBank and OpenAI are the lead partners for Stargate, which SoftBank have a financial responsibility and OpenAI having operational responsibility. Okay, so that makes sense. So SoftBank's kind of funding it. OpenAI is kind of, being the sort of figure of how this ends up playing out. And then Masa-san will be the chairman. ARM, Microsoft, NVIDIA, Oracle, and OpenAI are the key initial technology partners. That makes sense. The build out is currently underway, starting in Texas, and we are evaluating potential sites across the country for more campuses as we finalize definitive agreements. I mean, like, what else can you say other than bullish? Freaking bullish. The idea that Larry Ellison and Masa-san and NVIDIA and Microsoft are going to pool together $500 billion in order to then develop something that is going to be essentially the modern AI data centers of our time in the context of the new infrastructure they're setting up, particularly in Texas, which is very interesting that they're choosing Texas to be able to do this, is pretty damn exciting. It's pretty damn exciting. Here is Trump talking about this a little bit yesterday, and then we'll keep going from there and talk more about what this means for the semis.
Welcome three of the world's leading technology CEOs. And in the case of Larry Ellison, it's well beyond technology. He's sort of CEO of everything. He's an amazing man, an amazing business person. But to announce the largest AI infrastructure project by far in history, and it's all taking place right here in America. As you know, there's great competition for AI and other things, and they're coming in at the highest level. We're joined by Oracle Executive Chairman Larry Ellison, SoftBank CEO, my friend Masa Yoshi-san, and CEO of OpenAI, and I would say the by far the leading expert based on everything I read, Sam Altman. So that's great that you're coming in together. That's a massive group of talent and money. Together, these world-leading technology giants are announcing the formation of Stargate. So put that name down in your books, because I think you're going to hear a lot about it in the future. A new American company that will invest $500 billion at least in AI infrastructure in the United States, and very, very quickly, moving very rapidly, creating over 100,000 American jobs almost immediately.
It's a big deal, dude. It's a big deal. First of all, it's a big win for Trump. I mean, his second day on the job, and he gets a $500 billion announcement over the next 4 years. $100 billion is going to be deployed immediately. All of this, if people are wondering, like, where is this money going to go to my understanding from the stuff I read last night, data centers. And of course, our girl Nancy bought VST, which is energy for a lot of these data centers, a couple of weeks ago. Why? Probably, maybe, who knows? Maybe she might have known that because I didn't know about this. I don't know if you guys knew that there was going to be some $500 billion infrastructure announcement, but I'm pretty sure this announcement didn't happen when Trump got elected, or when Trump got sworn in. I'm pretty sure this has been brewing in the background for months, and now it finally got announced. Maybe Nancy knew that there was going to be a shit ton of spending on infrastructure coming up in such a in such an egregious way, $500 billion. And one of the companies that would benefit from that is obviously the energy data center plays like a VST. VST, by the way, up 5.3% in the pre-markets. This thing was up 8% yesterday, so now it is up about 15% since Nancy Pelosi disclosed that she bought. And don't even get me started on Tempest. We'll talk about that later, but this was up another 7% today. It was up 35% yesterday based off of Nancy buying it. So the point is there was a ton of momentum for AI, a ton of momentum for CapEx. NVIDIA's up 3% right here. If we look at all the semis, you've got all of them green, all of them. Dell's up 5%. Lam Research is up 1%. SMCI is up 5%. AMD's up 1%. NVIDIA up 3%. Qualcomm up a little bit. TSM up 1.3%. TSM also had a great earnings. They are now well solidified as a $1 trillion company, 1.13 trillion. Intel is up another 0.5%. I mean, it's just incredible. It's just incredible. So all of the sort of nervousness that we had in the beginning of January, which I think was fair to be nervous given how good of a year 2024 was. Not saying we shouldn't be nervous, not saying there's not going to be volatility, just saying when Netflix is crushing earnings, when the 10-year is coming down, when shelter and automotive insurance, new vehicles are starting to fall down, which is a catalyst for inflation, when Christopher Waller comes on CNBC and says, actually, we think we're doing a great job on inflation and we do think it's going to come down, when Austin Goolsby's fighting with the CNBC hosts about how they're angry about inflation, he's like, what are you guys talking about? Core PCE is below 2%. And when you got the dollar that's probably going to come down in 48 hours when Japan hikes rates, which seems all but inevitable that Japan is hiking rates, and we'll look at some data on why the yen carry trade probably is not going to be a thing because the short float on the yen is gone to its lowest levels in the past couple of years. The dollar right here at 107.99. And then when you've got Stargate, $500 billion coming into AI CapEx spend, I just don't get what the bearish thesis is. Like, you've got AI firing on all cylinders. You've got the financials doing great. SoFi's at freaking $18 in the pre-markets. All the banks crushed earnings. You got Netflix, which is a consumer play, crushing earnings. You got United Airlines, which is up 5.5% after it was up 3% yesterday, after it was up 97% last year. Why? Because everyone's traveling. I'm about to buy a ticket to California on United in a couple of days. I mean, like, it's just like, I don't know where the bears are getting their bear sentiment from outside of the fact that they think things are frothy. And yes, I know the Trump meme coin is an example of things being frothy. But if we get a little bit more of a different perspective, it's more so an example of crypto just being in its prime time era in terms of the ability for so many people to get excited about it. And I get the frothy argument, but then you see these companies crush earnings, and it's hard to say that it's that frothy. Why? Well, here's a stat from this morning that I think is very important to understand. Although we're early into earnings, S&P 500 companies have surprised with an 8.9% earnings beat so far. 53 out of 500 companies have reported, so a little bit more than 10% have reported, 11%. But 8.9% of them have had a surprise, and 75% of them have beat the consensus numbers. I mean, again, I'm not saying this is time to go all in and you just have to be in the markets. Obviously, raising cash is important. There's probably going to be volatility. It's just one of those things where if anyone thought, cash is the best option of 2025, like some people did think, so far, that's not seeming to be the case. So far, what's seeming to be the case is everything is firing on all cylinders, and maybe tariffs messes it up, or maybe Amazon really does mess up on earnings and it's not. But until we see any of that evidence of that happening, it does look like we have more momentum to go. At least here in 2025. Let's hear from Dan Ives and his perspective on U.S. AI infrastructure and what this means for the software part of the broader market.
You acknowledge that there is some sort of expectation and therefore you get excited alongside, we saw the stock react in the late afternoon.
Yeah, look, Melissa, I think it's something you're going to have to start to model in. I mean, not just for names like Oracle, but especially when it comes to any of these sort of data center innovation plays, the Palantirs, Microsoft, and others. And I think now it's a question of the multiplier effect and how quick this is going to happen. But we're seeing this off to a fast start, and everything we're seeing in the Beltway, this is going to be just really, really positive for more of the data center players, from Microsoft, for Amazon, for Google, and of course for Oracle.
Hey, Dan, it's Dan. When you think about some of these numbers being thrown around, there's no specifics here. Microsoft gave some CapEx guidance, I want to say a few weeks ago. They kind of guided to maybe $80 billion in the next year or so. 40 of that was going to be overseas. Don't you get to a point where you can only build so much data center infrastructure here in the U.S., especially for these big multinationals who have to serve other places around the world? And the last part of this question is, and what about power consumption? Like, some point, there's only so much data centers you can build in the near term because you are power constrained.
Yeah, Dan, I mean, you hit on a great point, because the reality is we could talk about these CapEx numbers, but it's about you need the grid, you need the energy, and we could talk about nuclear and other names like ACO and and others. But if you look on the data center side, I mean, there's essentially going to be more data centers under construction than actual data centers. But now, how quickly that gets built, and especially when we'll see it in earnings, but for Microsoft, for Amazon, for Google, the CapEx is there. But now it's about monetizing and how quick. That's what the street's going to be focused on for the next 2, 3, 4 quarters.
Dan, it's Tim. So let's do that then. So let's act like today didn't happen. As you were looking at the universe of getting exposure to AI across, a number of different, let's call it just ancillary industries, but or straight out of Broadcom, or straight out of some part of the legacy players we know about. Where are you coming into today before this news?
Look, Tim, I think you're looking at not just Broadcom, but what I believe is sort of the second, third derivatives. I think this is bullish for software. I think when you look at names like Salesforce.com, Mongo, of course, names like Palantir and others, because as the data centers get built, it's skating where the puck's going. Where are the use cases? That's really what the key is going to be over the next 2, 3, 4 quarters. I think this is bullish for software, because data centers, they get built out, the use cases are going to be software driven.
And he's right about that. It's a simple argument, but there is no point for it to build these data centers other than to train models, to do inference training. And the training for the models is either A, for something like FSD, B, for something like robotics, or C, for enterprise software. And so if software is going to be one of the biggest beneficiaries of more advanced models that are going to be trained from these data centers, you would think Salesforce, Snowflake, Datadog, Palantir, et cetera, get those benefits.
But the use cases aren't clear right now. I mean, are we going to be at a point where we have the data centers in place, but the use cases, that part of the equation hasn't exactly caught up?
Yeah, I think right now it's starting to catch. I mean, I think we saw it with Beinoff and Salesforce. We've seen it with ServiceNow, Palantir, and now the use cases are really going to start to explode because these companies, when you talk about all the AI capex, it's about the multiplier. For every dollar spent on an NVIDIA chip, there's an $8 to $10 multiplier across the rest of tech. That's bullish for all these data center players, bullish for software. And that's going to really be the focus going into earnings season in terms of playing out these sort of next derivatives of AI.
Yeah, Dan.
So again, I think the argument, the pushback around not enough use cases, I think that argument is becoming old now. I think there's two obvious use cases, self-driving and robotics, which are going to be, we saw Jensen talk about it at CES. There's going to be massive, massive industries. It's not just Tesla that's in self-driving. Jensen's coming up with this Cosmos synthetic data platform to help all these other OEMs get into it. Robotics, obviously going to be massive. But we're seeing the use cases with a company like Palantir. If you just go on their website and see the case studies of all the different ways enterprises are using AI, in particular, how they're leveraging AIP inside of Foundry. So I think those are just going to expand further and further and further. There's going to be new use cases, new companies that are getting benefits from it. And then, in a couple of years, it's not going to be a question of what are the use cases. It's going to be a question of how many more use cases can we get, because we're seeing so much momentum on the existing use cases that are actually creating operational efficiencies within the business, which is why Palantir is going to have pricing power and be able to charge a premium. The 10-year, by the way, 4.572. If that bad boy comes down to 4.4, that will be the lowest in about a month, which would be very nice to see. On the 10-year, people forget that 10-year was at freaking 3.875 in October when CPI was at 2.5%. So it has gone up a decent amount since then, but at least it's not at 3.8% right now. Why only full self-driving and robotics? Why not white collar work? No, I agree. White collar work as well. I mean, if you're a subject matter expert, if you're a consultant and you just need to come up with a presentation and ChatGPT, like, dude, I use ChatGPT every day. Like, I use it literally just to talk and try to get ideas and think of different stuff. I mean, it's become like a personal assistant for me, even though it's not like a agent inside of my phone, but I'm constantly asking questions to it all day just to get a better understanding of like the world. And from that perspective, I do think that for even white collar workers, they're going to get a lot of value from it as well. So transitioning from the data center $500 billion investment, which we'll talk more about later, but the gist of it is that AI spend is going through the roof and it's not stopping. And in particular, I think NVIDIA and the semis benefit from that. Let's talk about Tesla. Dan Ives raises his price target from 515 to 550. This comes after Piper Sandler raised it to 500 after 315. And he says, as we have growing confidence in the demand delivery story for 2025, along with a fast tracking of the autonomous future underneath the Trump administration, we view this as a golden era for Musk and Tesla in 2025. So here's the poll. Here's the poll I have for everybody. I'm very curious what people have to say about this, because I think this is the moment where you have to decide. This is the moment where you have to decide. It's a very simple question. Do you think of Tesla only as a car company? And when you answer this question, if you say yes, that means this stock price is egregious. Just know that. If you say yes, $420 is like you're an idiot for buying it at $420 if it's a car company. If you think of it as more as a car company, then I think you got to just kind of bite the bullet. And it's like, all right, I could be wrong on the timing. It might go back to 370, but at some level, it's just like you need to be locked into where you think the world is going. And if you think the world is going to robotics and FSD, and that will dramatically compress that PE over the next 5 years by creating S curves of growth that are unimaginable, that we only saw back in 2019 for Tesla, that's when it 20x, then you believe that Tesla's going to 500, right? You believe that Tesla is going to be much more valuable than it is currently right now. We got 89% of people saying no. We got 11% of people saying yes. And so, this is why the market is kind of, this is why Tesla's obviously in the 450s or in that mid 400 range, because the market overwhelmingly is thinking of Tesla more than a car company. There's no way it would get to the stock price if they didn't think of that. But still, the reason it's not exploding the way some of these other companies have exploded over the past couple of days with CPI, AI announcements, etc., is because the EV mandate might go away. Okay, why is that bad? Because then people might not buy as many cars. Okay, why is that bad? Because then the car company Tesla doesn't make as much money. So still, you have these generic bearish arguments around the automotive business that I think are weighing down the stock a little bit. And we know that it's probably the EV mandate, because Rivian as well is down 1.28%. Both were down about 5% yesterday. So I think you have to kind of decide, what do you think of Tesla? Do you think it's more than that, or do you think it's not? Because if you think it's more, you think that this price will be cheap in 5 years. If not, you think it probably is going to be stuck trying to get better gross margins to appease the street. But I think this is the question right now in the context of Tesla long term. So 416 on Tesla, got a price target raised by Dan Ives. Again, he's relatively bullish on the overall story. We'll see how the stock plays out a little bit later today. It did not benefit from that EV mandate executive order happening last night. Nonetheless, Elon doesn't care that much because he's focused on a lot of other things to get Tesla to the next level besides just automotive deliveries. Speaking of Elon Musk, that Bloomberg article a week ago said Elon might buy TikTok. We finally got some comments on if that would be the case.
Well, let me do this first.
Are you open to Elon buying TikTok? Are you open to Elon buying TikTok?
I would be if he wanted to buy it.
Have you discussed it with Larry Ellison?
I'd like Larry to buy it too. I have the right to make a deal. So the deal I'm thinking about, Larry, let's negotiate in front of the media. The deal I think is this, and I've met with owners of TikTok, the big owners. It's worthless if it doesn't get a permit. It's not like, oh, you can take the U.S. The whole thing is worthless.
Trump is right about that, by the way. I mean, if you get the U.S. business outside of TikTok, it is not going to be worth as much as it could be worth with the 170 million users that use it in the United States.
The permit, it's worth like $1 trillion. So what I'm thinking about saying to somebody is buy it and give half to the United States of America, half, and we'll give you the permit. And they'll have a great partner, the United States. And they'll have something that's actually more valuable because they have the ultimate partner, and the United States will make it very worthwhile for them in terms of the permits and everything else. But so think of it, you have an asset that has no value or has $1 trillion value. It all depends on whether or not the United States gives the permit. So what I'm saying is let the United States give the permit and the United States should get half. Sounds reasonable. What do you think?
Sounds like a good deal to me, Mr. President.
Mr. President.
So now I would imagine it sounds like a good deal to Mr. Larry Ellison, founder of Oracle, because Oracle was hosting all the data for TikTok servers in the United States over the past couple of years. I don't know how this is going to work. I don't know if the United States could own 50% of TikTok because we don't really nationalize companies that often in the United States. I think Trump, maybe by saying the United States, he doesn't literally mean the government. He means like a U.S. entity that's getting the benefit of TikTok. But in general, we got another 90 days. I think that was extended for us to be able to figure out what's going to happen with TikTok. And if there is some deal that gets done, maybe Elon's going to be in the middle of it. Maybe he's going to be brokering the deal. Maybe he potentially actually buys TikTok. Who knows? But it does look like there's going to be a U.S. entity that gets access to TikTok. This is not going to be a beneficial thing for Meta or Google. Now, I don't think it's going to be a bad thing for Meta and Google, but there was a tailwind coming for both of those names if TikTok did officially get banned, but TikTok's not getting banned. So whatever tailwinds that's going to happen for Meta is likely going to happen through actual earnings growth for Meta, which hopefully we will see going into 2024 Q4 earnings. Speaking of Meta, this is a upgrade from the street that we got this morning from Jefferies, 715. Expectations for Meta are reasonable, up 4% since Q3 versus Amazon up 24% and Google up 17%, which is actually reasonable. I mean, Meta is only up 4% since Q3 compared to the other hyperscalers that have gone up double digits. While we see potential in downside to free cash flow estimates as Meta delivers initial full year 2025 CapEx and total expense guidance, we believe this would likely be a bottom and that there would be strong returns from these investments. Our ad checks remain bullish on Meta, and our convers with teens indicate that TikTok's ban is driving them to IG Reels, reiterated by $17 under $15 is 24x our fiscal year 2026 EPS. It's one of those things, bro, where it's like, again, we talked about this a lot in the final 5 days of December because every single analyst we were watching on CNBC was saying large caps into small caps. That's the rotation. And in the first 20 days of January, it's like, large caps into large caps, more large cap potential, more large cap spending, more large cap ad growth, more large cap momentum in terms of different potential acquisitions they can do now that we have Lena Khan out of the FTC. I mean, there's just so many reasons to be bullish on large caps. Not to say small caps can't do well, and we could have an everything rally again like 2024, which would be insane if 2025 is a repeat of 2024. But it seems like the big get bigger. It seems like the big get bigger. I would buy NVIDIA over Oracle. I've never been a big fan of Oracle because although Oracle is an amazing company, amazing stock, and I think they were up 90% last year, they don't grow like NVIDIA grows. Now, Oracle right here up 10.94% right now. The reason they're up is because of this whole Stargate thing, which makes sense for Oracle. But their growth is not anywhere near like Nvidia's top line revenue growth. And so from a, when you just look at a PEG ratio or a price to earnings ratio in terms of fiscal year 2026, Nvidia is cheaper than a lot of the biggest names because the market's still expecting Nvidia to compound at 50% over the next 2 years. So I still would pick Nvidia over Oracle, but I mean, Oracle's a $500 billion company. They've done incredibly well over the past year, and they doubled basically last year. It does seem like they are not slowing down in terms of the CapEx data center spend that they will be deploying as well. Let's listen to Satya Nadella talk about AI and get some updates from Microsoft, which is a stock that really hasn't moved that much.
Announcing a new joint venture yesterday called Stargate to build and grow AI infrastructure in the U.S. OpenAI, SoftBank, and Oracle plan to commit $100 billion to start, potentially up to $500 billion over 4 years. Microsoft listed as one of the partners to the new venture. Joining us now for an exclusive interview is Satya Nadella, Chairman and CEO of Microsoft. Good morning to you.
Thank you so much.
And it's so good to talk to you in the midst of all of this, because we're all trying to understand it and what it means, whether it's possible to get to $500 billion, and what it means specifically, I think, for your partnership with OpenAI, given that they had been using Azure exclusively and now obviously are going to be on other platforms as well.
Yeah, first of all, anytime a company that you've sponsored and were essentially a seed investor in raises money from others, it's a good day. A good day for OpenAI and a good day for Microsoft and our investors. Look, our partnership continues. We'll be a tech partner to Stargate, but more importantly, our partnership with OpenAI, you talked about exclusivity. OpenAI APIs are exclusive to Azure going forward even. So nothing changes there. IP access to Microsoft continues. And in fact, because of this, there will be more IP. And so therefore we'll benefit. And we have rev share arrangements that are great. And also OpenAI committed in a very significant way to Azure consumption. And so we're very thrilled about that as well. So all up, as far as I'm concerned, this accelerates OpenAI's model work, which accelerates Microsoft's ability to go to market with those models and really grow our business.
Let me ask you this. We had one of your competitors on early this morning, Mark Beinoff, who has been very critical of this partnership. And one of the things that he said this is a demonstration of a fissure between the two companies, that you are going to go off longer term and build your own frontier models, and that there's a disconnect or of some sort between Sam Altman and Mustafa, who you hired to run your AI program. Can you speak?
Mark Beinoff also said Copilot has failed. So Mark Beinoff is going super offensive against Microsoft.
Speak to that.
I mean, look, I think the partnership with OpenAI to us is a critical partnership. We love it. It's working. It's created a lot of value for us. And we plan to just continue forward with it. It's true that on Azure today, there are other models. There are open source models. We have our own small language models, and we'll continue to have all of that. Because customers at the end of the day are going to demand choice there, and that's fine, and we'll make sure we support it. But having a leading model on Azure exclusively is a great advantage to us, and it's good.
Let me ask you this. So I talked to Sam Altman at DealBook just about a month and a half ago now, and he says, I don't think we're disentangling, to your point. He says, look, I will not pretend there are no misalignments or challenges. Obviously, there are some. On the whole, he said that he thinks it's tremendously positive. What are the things where there's not alignment? One of the things I noticed in one of your filings recently is you actually put OpenAI as a competitor on your list, which I thought must speak about your ambitions long term.
Yeah, I mean, more importantly, I think for us, one of the things that, in fact, Stargate is the answer is, Sam wants to continue with the scaling laws to build out more compute in order for him to train more models. And we have a ROFR, so he comes to us first. If we meet those needs, then we clear it. If not, he can go to these other providers. And so therefore, I think it works out well for Sam and for us. So this was an adjustment, quite frankly, that we made in order to support both his needs, while at the same time keeping the integrity of what we wanted as the strategic value.
You're investing $80 billion already. How much money do you ultimately put into this?
So this is where, Microsoft is investing $80 billion in capital each year. And this year we're investing. And I'm not particularly in the details of what they're investing.
Okay. And so, but when you look at that $100 billion commitment, $500 billion potential, I don't know if you saw Elon Musk took to Twitter and said, they don't have the money. The money doesn't exist, as if this is not really going to happen. What do you think of that?
Look, all I know is I'm good for my 80 billion. I am going to spend $80 billion building out Azure. Customers can count on Microsoft with OpenAI models being there everywhere in the world, serving OpenAI models and other models. That's, I think, what I know.
One of the other discussions here in Davos, and even before Davos, has been this question of whether there's a wall, whether the scaling laws will continue apace. And Sam Altman has been...
It is nice to see him confirm that 80 billion of CapEx will happen for Microsoft, which is very bullish. It is a little weird, the relationship with OpenAI. I think the relationship ultimately will be bullish and it's going to be good for Microsoft, but it's one of those things where they're not necessarily doing it internally. They're doing it through a partner, but now that partner has other ambitions. So I don't know. I didn't really get the best answer from like how that relationship will revolve itself. But I also disagree with Beinoff saying that Microsoft has failed at AI. Like, I think that's kind of ridiculous. And you got to give some credit to Satya not taking the bait and fighting back with him right here, because that just wouldn't be as professional.
Out there saying that they will continue apace. Sundar Pichai has been suggesting that actually it gets a little bit more complicated sooner than we may imagine. Where do you land on that?
I mean, I think both are true, actually, because the reality is I don't think there's a wall. Things do get harder with scale. And interestingly enough, pre-training scale with, as the scale goes up, gets harder. But then what Sam and team have shown, even with O1 and now O3, is this inference time compute and the ability to really have inference scaling compound in some sense the effects of scaling laws. So what used to be a 6-month doubling, maybe a 3-month doubling. So I would say scaling laws are very much alive. And the question now is, in fact, if anything, how do you take advantage of all this capability building to deploy real AI systems?
Where are you on your own frontier models? Obviously, you did hire Mustafa. You have your own efforts that are underway. What does that look like? When will we see that? And what do you think that ultimately does to, I mean, you've done remarkably with OpenAI, and that may turn out to be a spectacular investment unto itself, but how you think this whole landscape shifts at some point?
I mean, I think just to be very, very clear, we have access to OpenAI IP, so we're not going to do things twice. So we are very, very happy with the access we have to OpenAI. It's just that we do have other models that we have built. We built the public model that we talk about is Phi, which is an SLM, a small language model, 5.4. It's best in class for its parameter size. And we have other models too. But to me, the more important thing for me is to build value on top of OpenAI. So we have a fantastic post-training stack. We have done even a bunch of mid-training in different languages. So that's where our focus is.
When you think about...
All right, we got 2 minutes left, 1 minute left until we get into the market open. Today is going to be an interesting one, guys, because yesterday was a first really green day for the broader markets underneath Trump. S&P's at 605. I didn't even see that. That's up 0.5%. I think all-time high was 609. So, yeah, we are pretty much at all-time highs in the S&P 500. Hoodie, we didn't talk about Hoodie in the pre-markets yet, but we had a $50 close, which was incredible. $50.22 right now in the pre-markets. If we can hold 50 and make 50 that golden support for Hoodie, that would be incredible in 2025. So this will be our second day of trying to maintain $50. IBKR, by the way, they're up 7%. Why? Because their margin balances are the highest ever in history. The IBKR CEO yesterday was ecstatic. He's a little worried about crypto and some of the froth in crypto, and that could melt down. But overall, he's very, very happy with the broader ecosystem of investing. And we're seeing that in the results for companies like IBKR as well. All right, here we go. 9:30, Wednesday, January 22nd. The stock market is once again open. Wake your ass up. Let's get into it. The S&P 500 opens up 0.45%, 605.75 on the S&P 500. Tesla is down 1%, 419. Rivian's down 2.2% at 1299. Oracle, a whopping 10%. They just added $80 billion in market cap, 190 on Oracle, up 10.1% right here. Tempest AI, the Kathy stock, the now Nancy Pelosi stock, that one is up 4.5%, $49.73 as well. Palantir hit 75.40 yesterday after hours, now 74. How does Palantir benefit from the $500 billion invested in Stargate? It just means more demand for AI enterprise software, kind of what Dan Ives was talking about. So the more spending on those data centers, the more spending on GPUs, the more spending on models, the better the AI infrastructure makes the software derivatives of AI infrastructure, which is something like a Palantir AIP. And that is what the market is probably excited about, giving Palantir a bit of a bid right here, 1.3% up as we get into the opening markets. NVIDIA, 2.5%, 144. NVIDIA's all-time high was 153. NVIDIA trying to make its way back there, 144.8. Netflix, 974. Okay, so Netflix got hit at 1,000. It's up 12%, but it was at, Netflix was at 1,006 in the pre-markets. It was also at 997 right before the market opened. So you did get some rejection right there. Tons of sellers stepping in and taking profits, as they should. I mean, the thing is up 12%. Probably should take some profits right there, but Netflix getting hit just a little bit. Alibaba's down 0.5%. Bitcoin's at 104,000 right now on Bitcoin. Where is SoFi? SoFi, 1785. SoFi is getting hit as well. SoFi is getting hit as well. Robinhood holding 50. Robinhood still holding 50. 50.34. Wow. What an open by Robinhood, holding $50, $50.32, up 0.5%. IBKR is up 5.85%. Rocket Lab is down 6%. I don't think that's a big deal because Rocket Lab was up 30% yesterday, so probably going to take a breather. That's fair. But Rocket Lab right there down 5.8%. SoFi now going green, 1791. Tesla about to go green. Tesla's 0.5% away from going green, up from 415 to 422 on Tessie. NVIDIA 145, up 3.45%. Enphase is down. Bank of America is down. Qs are 530. That's almost an all-time high for the Qs. Qs all-time high was 538. So we're at 530. That's up about 1% on the Qs. Whereas Google and Amazon? Google 199. That's up 0.5%. Amazon 232. That's up 0.5% as well. Oracle continuing to gain momentum. Oracle right here up 7.53%. Tesla goes green. Tesla goes greeny green. Where's Palantir? Palantir is up 2%. Again, Palantir likely being pitched by a lot of these fund managers as the beneficiary of all this CapEx spend when it comes to enterprise AI software. And if that CapEx spend makes these models even better, then Palantir's AIP should get even better, and that should lead to more top-line growth. Palantir earnings February 3rd, only 11 days away. So we are just over a week away from getting the results and guidance. SMCI is up 4%, trailing on NVIDIA. Let's go to the semis in general. Semis are green. The only semi that is red is Micron. That's interesting. It's kind of weird that Micron's red there. And then on semiconductor, everything else, even Intel, is green. SMCI up 3%, AMD is up 1.1%, and then NVIDIA 145.58. I think it touched 146, 146.23. It touched for a second, trying to make its way back to 146. ARM is pumping. Yeah, ARM's pumping. Well, look, this makes sense. So SoftBank owns 90% of ARM, and SoftBank's the one that's investing this $100 billion into Stargate, or they're investing part of it. So if ARM, I imagine Masa-san is going to make sure ARM is involved because he owns 90% of the company inside of these AI investments to be a beneficiary of it as well. So part of the reason he's probably investing this money is to help his other investments in AI, which, ARM is a big one. Remember, Masa-san, the reason why he's doubling down on AI is because he's pissed off about NVIDIA. This dude owned 5% of the company. If he had held on to NVIDIA, he sold it for $4 billion, he would have had $300 billion in NVIDIA stock right now. He would be up there for one of the greatest investors of all time if he held that stake in NVIDIA, but he sold it back in 2020. So I think that's why he's doubling down on AI, and he's trying to, find other ways to recoup some of that money that he ended up missing out on. Netflix right here, 977, Palantir 74.67, Vistra giving up all of its gains. Wow. That one was up 5% in the pre-market. That one just went not red, but it gave back a lot of it. And then Tesla 425, Tesla's green. Tesla is greeny green. Tesla is green. Where's Next? Is Next getting crushed? This is the LNG play. That one's down 3.3%. Again, they don't have revenue yet. They don't have earnings. So this one runs on a lot of narrative, a lot of momentum. It could also go down in the same way. But this is why, if you're bullish on energy infrastructure, it's one of those things you just buy and hold for the next decade. Alibaba's down a little bit. That's weird because China did stimulate today. China added, the stat is China added like another trillion yuan. They added, 1.15 trillion yuan through a 14-day reverse repo into the banks. So it's a decent amount of stimulus. It's not crazy stimulus. It's a good amount, but it's not enough to get Baba pumping right here, as Alibaba's down about 1%. Where's Grab? Grab is 466. All right, not bad. Grab up 1%. The dollar is just above 108, 108.04. The 10-year, 4.58%. A little bit of an uptick on the 10-year, but still down from 4.8 last week. Where's Hood? Hood has a big candle. Wow. Hood 50.59. Bitcoin's not even pumping. Bitcoin's not even pumping for Hood to be doing this. This is, I mean, wow. Market's getting excited for Hood. People are stepping in. Market cap of Hood is 44 billion. They got 5 billion in cash. So real enterprise value is 39 billion. They're going to grow upwards of 80% next quarter. Again, the crypto volumes on this new Trump meme coin, all this stuff, those are catalysts. I think the market's just realizing. And futures aren't even live yet. I mean, there's so many products that are about to get rolled out. Index options did get rolled out yesterday for everyone on mobile. So that's an additional source of revenue. I think the market's just getting really excited about that overarching thesis from a broad perspective on Robinhood. IBKR is up 6.5%. Disney's up 0.4%. Apple continues to go down. Apple had 3 days back-to-back of about down 2%, 2 days of down 4%. It's slightly red, not really red, but still is not able to hold any green right now. Nubank is up 3%. That's nice. Nubank was down a little bit yesterday, so that's nice. Nubank right here up 3.5%. XYZ. By the way, this whole XYZ thing, guys, it's kind of growing on me. I know I was clowning this ticker symbol XYZ. It's kind of growing on me. Is it growing on you guys, XYZ, or is it still kind of stupid? I don't know. The more I look at it, I'm like, that's kind of cool, XYZ. Maybe it is still stupid to some people, but given that they used to have Square, but the company's name was Block, it does make sense they changed and they got rid of Square because everyone kept calling it Square. Maybe now people will call it Block. But XYZ is the ticker symbol there. That's up 0.35%. That had a nice run yesterday because of Bitcoin. NVIDIA right here, 145.2. Oracle, 183. Okay, everyone's saying it's still dumb. All right, that's fine. Rivian's down 2%. Tesla went green. Tempest just went red for the first time in 3 days ever since Nancy bought it. Netflix, what a rebound. Wow. Netflix was actually close to Netflix was at 965. Now it's back at 980. Yo, who's buying Netflix? Who's buying Netflix? Or better yet, who's selling their Netflix if anyone has some of their Netflix? Who's selling their Netflix? Let's see what you guys are saying. Amit is like listening to a horse racing commentator at the start of the market. That is exactly what other people have told me. You know, we found out a couple months ago there's an auctioneering school because everyone kept saying I should apply to be an auctioneer, and I looked it up and I was like, there's a legit school. There's like a college where they teach you how to be an auctioneer. SoFi just went red, 1773. It makes sense. It was up 9% yesterday, taking a little bit of a breather. Tesla 422, Rivian 1297. That's down 2.4%. Palantir still holding on to the green, and then Netflix at 980. No one said they're buying Netflix. Michael said he's selling Netflix. Ken is holding. Is Uber green? Uber is green, up 0.4%. Yeah, doesn't seem like anyone here is necessarily buying into the strength on Netflix. I mean, dude, it's just hard to buy Netflix after going up 15%. Big tech companies don't go up 15% in a day. That doesn't happen. Netflix added $115 overnight. I mean, it's just like, and to buy that, you have to be so confident that they're just going to keep up that growth. And that's tough. It's like, you know, those type of quarters don't happen that often. So this is one of those days, I think if you're in Netflix, you sit back and you just enjoy the beauty of the stock market and being right about a company and having conviction. Getting into it here, I don't know. But then again, I've been wrong since like $100 on Netflix. So maybe getting in here does work out long term. Microsoft needs to come down a lot, says Kris. Microsoft right here, 436. Microsoft, again, underperformed the S&P 500 all of last year. It was up 13% versus 25%. Year to date, Microsoft is up 4.25%. That interview from Satya didn't really give me that much more confidence about Microsoft's overall growth. I think in their earnings, they're going to have to double down and explain what the thesis is. It's not that I'm saying Copilot is not a good thesis. It's just I think people are kind of bored of it and they want to see what's the other parts of AI outside of Azure and cloud that are going to massively increase Microsoft's bottom line. And I don't think we have the answer to that yet. And Copilot can't be the answer they roll with on earnings, at least not right now to get the street excited. Netflix and Costco need to split. I agree. Netflix. Oh, by the way, another reason Netflix is up, they're buying back $15 billion of their shares. $15 billion. I mean, like, goodness, dude. Not only do they crush member expectations, 9 million versus 19 million, then they say we're just going to buy back 15 billion of our stock. And so the street's like, all right, so if there's a massive dip, we know you guys are going to get ready to buy it. So that's another reason people are excited. Robinhood right here, 50.69. Let me check resistance at 51 on Hood. And see what we're looking at right there. 51 resistance on Hoodie is 6,400 shares. That is not a lot, which means if Hood has the volume, we should be able to bust through 51. S&P 605. SoFi getting hit again. Probably a great day yesterday. I think the biggest question on SoFi is, will this be one of those quarters where they beat and they get out of this doghouse of beating and then pumping and dumping? Or will it be a continuation of what we've seen in the past? And I think it's going to come down to how strong Noto communicates their Q3 results or their Q4 results and then their Q1 2025 guidance. Palantir right here, 74.55, still up 2%. SMCI up 2.5%, giving away some of its gains. Rocket Lab down a nice 8% right here after going up 30% yesterday. Redwire is also down 5%. Some of the space names are probably down. Reddit got downgraded today by Bank of America to 195, even though that's higher than the current price right now. They got upgraded from 119, but the analyst said, hey, shares are running really quickly. We don't have anything constructive or critical to say about the business, but the stock is up too much. So there's more of a valuation reason to sell. ASTS is at 23, and then Lunar is at 22.45. That's down 2% right now. Are Costco workers still going on strike? That is a great question. Let me get an update on that. 18,000 of those workers were scheduled to go on strike soon. They will go on strike February 1st if a new contract isn't agreed on by January 31st. That is the headline on Costco. So Costco has 8 days to figure out the strike situation, or else workers will officially go on strike, or the negotiations. And if not, then workers go on strike. $9.50 on Costco. That's down from about $9.90 a month ago. I think Costco will resolve this. I don't think Costco workers have ever gone on strike before. Has that ever happened? I don't think that's happened. So if that hasn't happened, maybe this ends up getting resolved. Tempest back up 5%. It was red for a little bit. Vistra's up 1%. MicroStrategy is down. It was above 400 yesterday, which was very nice. SoundHound is down 1.1%. Let's look at the quantum names in our SPEC portfolio. SPEC is all red except Oklo, QUBT, that's up. Rigetti and IONQ are down. D-Wave is up 6%. Archer's down. Faraday Future's down. And MicroStrategy is down. GameStop and AMC are currently up right now. So the quantum names, some of them are pumping, some of them are down. The majority of the spec names are getting a little hit today. International playlist is pretty much all green except INQQ, the India ETF, FXI, China, and then Pinduoduo. Spotify, Novo Nordisk, TSM, Nubank, Grab, and Mercado Libre are all green on the day. Did Robinhood just launch futures trading, or is it just a slow rollout that I got? If you got the futures, then that means it's just you. That means it's just you, Matt. It's not everybody else. I don't see futures. I got index options, but I don't have futures. I imagine that'll probably be rolled out in the next month or two to everybody. Ty says Costco workers want to be paid in chocolate chunk cookies. That is, their cookies are good, bro. I'm mad they got rid of the Cheerio though. The Cheerio was really good. Am I saying that right? Cheerio? I'm probably saying it wrong, but those were way better than the chocolate cookies, but the cookies aren't bad. But then that whole Costco boom guy with his son, I think they made the cookie like they gave a whole new life to Costco marketing. But the Cheerios were good. Oh, it's churro, right? It's churro. Sorry, it's churro. You guys, dude, I think a year and a half ago you guys flamed me for that. It's churro, not Cheerio. Cheerio. That sounds like you're British. Cheerio. Yeah, it's churro. Tesla's down. Yeah, Tesla's down. Tesla is down. Tesla's not catching a bid ever since that EV mandate thing was announced, which is weird because I feel like the street knew about it. But Tesla 418 down about 1%. Someone asked in the chat, would you be buying Hood at these levels? I'm probably going to be buying Hood at these levels. I mean, like, I don't know, bro. I bought Hood at 8. I bought Hood at 14. I bought Hood at 22. I bought Hood at 25 the day it finally broke through that 25 barrier that it was stuck at for 7 months. I bought Hood at 28. I bought Hood at 31. I bought a lot of Hood at 34. And then I bought a decent amount at 41, 42. I think like 300-400 shares. I'll be buying it at 50. I mean, it's just, this is one of those things where you really I want to go long on this name. I think their growth is just like, it's not stopping anytime soon. And the catalysts are pretty exciting. So also, I think my adjusted cost basis on the shares is like under $20. So even buying at these levels, it's not that scary since I've been in the name. And also, I learned my lesson with Palantir. I did not buy into strength on Palantir, and I severely messed up. Could Hood get to $80 by the end of the year with S&P inclusion, future growth, buybacks, and new initiatives? Yeah, they could. They really could. And I don't want it to be like a Palantir where I refused to buy it as it was going up because I was just like, well, it can't keep going up. And it's like, well, it keeps going up. So it's like, buying into strength is not the worst thing in the world if the catalysts are there. And for Hood, it's different. Hood has the growth. Palantir didn't have the growth to necessarily justify all of the momentum, but Palantir was in the perfect narrative, and that narrative's not going anywhere. And I think the street's giving them the grace to grow into that narrative. The street will never give Hood the grace to grow into anything because they have their numbers. So there never needs to be a surprise on Hood. So if Hood's not growing, they'll tank it immediately. But with Palantir, it's a little bit more of a surprise because we don't get their numbers. But we do get someone like Karp who inspires the world and gets people to get excited to believe they will grow into their valuation. And as a result, people buying in the 30s, 40s, and 50s have done very well on Palantir. Amazon right here, 231. Google at 199. Oracle at 182. SoFi still struggling today, 1780. S&P 605. United Airlines giving back about 5% of its gains, 111.27, but still a great earnings for United. Is NVIDIA 147? Wow, 147.39. 147.39. NVIDIA's not stopping, bro. Up 4%. That's a big move on NVIDIA. That is a big, big move on NVIDIA. So I bought NVIDIA yesterday at 139. I have no idea when the next entry should be at this point. Like I gave myself a C plus in terms of the grade on my entry, because there was no analysis on why I bought it. It was just like, all right, Nancy bought it. I'm done, staying out of NVIDIA. I'm just getting into it. But I don't know. Does it make sense to buy another at 146 or wait till it gets down to 135 again? I mean, this is one of those names where it's tough, especially given how volatile. I mean, NVIDIA was 126 a week ago or 2 weeks ago. So it's not like this thing has not gone up and down pretty dramatically. ARM is up. Where's ARM? Are we up 10% on ARM? We are at, wow, 14% on ARM. Holy crap. When did we get 14% on ARM? Oh my. I bought 100 shares. I bought 100 shares of NVIDIA. 100 shares. Goodness gracious, dude. 14%. No one talked about ARM yesterday in that Stargate conference. It was more so about data centers and NVIDIA. And I guess obviously ARM's the beneficiary of that, but it's not like they explicitly mentioned ARM. It's pretty cool, dude. That is pretty cool. ARM right there, 14% up on the day. Let me show you guys this chart right here. As well, because this affects all tech stocks. But this was a chart that it's kind of been proving what we've been talking about when it comes to the yen carry trade. So take a look at this. The yen carry trade for equities is dead. Pretty clear from the CFTC data that yen shorts peaked in July, followed by a massive deleveraging. Although many people will probably forewarn about a round two when they hike next week, it won't happen. I agree with this. It is very unlikely, I think, to get a massive yen carry trade. A, because the market already knows about it. And when things are priced in, they're priced in. And it's hard to be surprised from a black swan event that's not a black swan. B, people know that Japan's going to hike. Like in December, it was pretty much assumed they weren't going to hike, even though they said they were. They were kind of like bluffing. And now we know they're not bluffing anymore. They're going to hike. It's going to be the highest interest rate in Japan since 2008. And that's not bad for the Dixie. That's going to get the dollar down. But that also means that people aren't going to be short the yen buying NVIDIA, and then they're going to have to cover their short selling NVIDIA because they already know what's going to happen. So I don't think it's something that's scary that we have to worry about from a macro perspective as well. Let's go back to the semis and see if they're doing okay today. Semis are all green except Intel went red, and then Micron not catching a break right here, down 1.4% as well. Chris says ARM is killing x86, AMD, and Intel, and then AMD is killing Intel. Yeah, I mean, that's definitely how the stocks are reacting. AMD is up more than Intel, and then ARM is up more than both of them. And they're getting a lot more momentum. NVIDIA right here at 147.06, up 4.42%. Not slowing down. NVIDIA, I think, is the winner of the day. NVIDIA's up the most. Yeah, outside of Netflix and ARM, NVIDIA, large cap, winner of the day. Apple down, and then Tesla down. Amazon and Google up about 0.5%, and then Meta up about 1% here right now. TJ says, thoughts on the grab warrants for 2026? I'm not a fan of the grab warrants because the strike on those is 11 and you only have till 2026. And as bullish I am on grab, I don't think it'll more than double early 2026. I think it could, but I want to be more conservative, and I'm expecting a double in about 2 years. So the grab warrants, although they're cheap, you only have a year for this thing to go from 4.6 to 11. And I think that's just too much. I don't know. It's too much risk for the amount of time. Now, granted, I think the company is really going to get their act together and show the world that they are past the 2021 SPAC days. And so we could get a massive move. It's just more risk if you're waiting for that to happen. What do you expect about ASML earnings? I have no idea. I know this company is getting very interesting to a lot of people. I don't even know how to analyze the company. 783. I know it. And when I was in India, I saw it fall to like $500 after they missed expectations by about 50%, which was not the best. Yeah, that was a drop. It went from 1,100 to 645. So it was a pretty nasty drop, but it's recovered. And I know a lot more people are getting excited about them. Overall, look, from my understanding, it's rooted in chip design and chip manufacturing. And if NVIDIA is winning, there theoretically should be more demand for the rest of the semis going downstream. So SMCI, I decided what I'm going to do on SMCI. On the day of earnings, I will be buying $50 leaps for January 2027. That is my goal. And I'll probably buy like $5,000 worth of it. And the reason I'm doing it is not because I believe in SMCI. I know nothing about SMCI, but 3 of my best friends, Chris, Matt, and Steve, keep talking about SMCI. And the worst thing in the group chat is when everyone's making money and you're not. So I'd rather lose money and have 3 people to blame, so they'll never hear the end of it, versus all 3 of them bragging about the money they're making and me being in the corner with that congratulations face. You guys know that meme where the kid's saying congratulations, but he's super angry? Like, I'm not doing that, dude. I'm not doing that. So if Chris, Matt, and Steve are making money on this, I'm not going to be in the group chat saying, oh, awesome, guys. I'm proud of you. I'm happy for you guys. No, screw that, bro. Screw that. So now if it tanks, then I get to blame them, which is great. It's always fun to not take accountability, always. So that is the plan for SMCI. That is the plan for SMCI. Nubank, are we running on Nubank? 3.4% on New. Where's Rocket Lab? Rocket Lab 29. That's recovering a little bit, down 7%. It was down 9%, so that's not too bad. We got some love there on Rock Lab from here. Elf is also getting a little hit. Some of the China issues are affecting Elf. That's down 2.5%. Where's Ulta Beauty? Ulta is down 2.13%. We're going to have to wait till 13Fs come out, which I think they're going to be coming out pretty soon, dude. We're going to be getting 13Fs and 13Gs very soon. And we should get a better understanding of what the hell's going on with the Buffetts of the world, the Druckenmillers of the world, and what they're actually buying. Speaking of some of these tech companies, we got an update from Dara from Uber. His stock has been in the news a lot, given it's compared to Tesla. Let's get his take from Davos and see how he's thinking of the economy and his stock writ large. Yeah, Dell is up a lot as well. Dell's up 5%. All the semis, all these semi-IT server plays are definitely getting some love this morning as well.
To the inauguration?
Yes.
And you personally gave $1 million to the inauguration?
Yes.
You had not done that before. Now, Uber had done that with Biden.
Yes.
But I'm curious about your personal decision to do that. And I will note, I was thinking Tony West, who's your great legal officer, brother-in-law of the vice president who lost the election. What was that conversation?
Well, listen, from our standpoint and from my standpoint, we want this administration to succeed. When this administration succeeds, the country does well, business does well, and we have a very broad envelope in terms of consumers, in terms of drivers, and we want to show support as it relates to administration, and we want to engage with the administration on things that our drivers care about in terms of the cost of living, in terms of the access to transportation and vehicles, et cetera. And, it's a beginning, hopefully, of a dialogue.
What do you think, though, just of this larger conversation people are having about the role of CEOs being engaged and involved in this administration, unlike any other in a very, very long time?
I think that having a voice as it relates to the future of the country and the economy is a positive, right? When the economy does well, the country does well. We're an economy that is the envy of the world.
Right.
And I think that a big part of that are the CEOs and the leaders who are.
What may happen to them, given where you are and where he is?
Listen, those are his decisions, right? And so we work
to the ambitions that you've set forth.
I think that our EV penetration could slow down to some extent. We'll see. We continue to lean in. So, for example, drivers who are driving EVs on our platform make more. We reduce our take rate. We're working with industry to get discounts to make EVs more affordable. So we're going to keep doing what we're doing. And I think anyone who bases their business plan based on government subsidies is not doing the right thing. Sure, they help, but the fundamentals for us continue to be there, and we'll keep running our business as we have before.
Are you campaigning either privately or publicly to continue?
No. No, I don't think we need those kinds of assistance.
Calling Elon? Are you talking to Elon to try to get to the president to say, hey, because you would think that he would want him, but he actually, well, in a way, he probably doesn't want him because he thinks that he's already in such a pole position.
We're in a very different position, but we don't need subsidies for EVs to succeed at Uber, and we continue to increase them because they're actually a really good product, and of course, they're good for the environment.
Autonomous vehicles.
Yes.
It feels like this is the...
All right, this is a soundbite. This is the important one. Let's see what he says about autonomous. By the way, hoodie, $50.78. It might be trying to go for 51 today.
Year of autonomy for Uber.
Absolutely.
You made a announcement at CES in terms of a partnership with NVIDIA.
Mm-hmm.
How quickly does all of this happen? And what do you say to your drivers? Because eventually, maybe not too soon, not too far away, they are going to start to compete with humans.
Well, I think that the technology development as it relates to autonomous is happening at an incredible pace. Obviously, we have a relationship with Waymo, with NVIDIA, but a number of other companies, Wave, WeRide, Waabi, and Aurora in trucking as well. This is a technology that is going to hit prime time, and it's going to make for safer streets.
And what do you think the timeline is now? I mean, it feels like finally we're talking about something realistic.
So I think that the technology will be ready for prime time between now and 2 years from now. Okay. It's moving very quickly, especially with some of the newer kind of 2.0 newer generation companies. The commercialization of EVs is going to take much longer. The bill of materials, the cost of the sensors, the cars, et cetera, is too high right now. And we think that our partnering with AV developers will speed up that commercialization because we can bring them a lot more business much faster. We have fleet operations in cities in which we operate. And, you'll be able to see it live in Austin, Atlanta early this year.
If I said to myself, though, that I was a potential Uber driver, that I was going to go out and buy myself a Suburban.
Yeah.
And I was going to try to amortize that Suburban over the next 5 some odd years, 10 years, and driving for Uber, would that be a good idea?
I don't think you are going to feel anything as it relates in the next 5 years. So, for example, in San Francisco, our business continues to grow and Waymo's growing. Just the overall envelope of the business is growing faster. And I think we will operate in a hybrid network combination, by far predominantly human drivers and then some AVs feathering in over.
I don't know if I like that answer, guys. Who likes that answer? That sounds like a very defensive answer. It sounds like, well, FSD's not here yet. We're not going to worry about it. We still think we can bring a ton of business to the autonomous vehicle developers because they have their 150 million users. That's not him kind of acknowledging the elephant in the room, which is those 150 million monthly users might not be using your app in a world in which they don't need to because an autonomous vehicle might pick them up for much cheaper and much safer than an Uber driver. Like it kind of felt, I would not have a lot of confidence as an Uber shareholder watching the Uber CEO speak like that. Like you want someone that's like, no, we're going to dominate the AV revolution. And here's our plan. He's like, well, it's not really here yet. In the next 5 years, we're going to be feathering in. I mean, he literally says the word feather in. Who says the word? We're going to be feathering in autonomous drive. Like what? I don't know. I wasn't super bullish on that interview. I didn't get a ton of excitement from seeing his long-term thesis on autonomous vehicles. NVIDIA right here, 146, Robinhood 50, 60, Tesla down about 1.53%. And then Palantir did touch 75 for a second, now back at 74.37. Did you guys get that impact as well? Did you guys feel like that? It wasn't excitement about Uber's future. It was more defense about why autonomy won't kill them, which is not a reason to be excited to buy the stock. It's maybe a reason not to sell, but it's definitely not a reason to be like, all right, I'm getting into the name. He can't say that because he needs to keep the drivers as long as possible. Well, that's fair. And that is one of the paradoxes of the business model of Uber. By the way, I don't know if you guys remember, this was about 8 years ago. Travis Kalanick, the founder of Uber, he was at a conference. And this dude, who was a driver for Uber, he asked Travis Kalanick straight up, what will you guys do when autonomous vehicles come over? This was 8 years ago and take our jobs. And Travis, part of the reason the board didn't like him and they fired him, Travis was basically like, you're out of a job. That's basically what Travis said. And it was kind of a blunt, like, yeah, buddy, like when we replace you, we replace you. So enjoy it while you have it, but you're going to be out of a job soon. Dara is a much more politically correct. He's not, he's not a founder. He's not going to say it like that. But nonetheless, that is the internal paradox inside of the Uber business model, which is that they don't need the driver. And as a driver, that kind of sucks because that's your livelihood. But the question becomes, what is the business going to do to drive shareholder returns? And one of the easiest ways to do that is to get rid of 20% or the 80% that they're paying off of every transaction to the driver. So I think it's a bit of a conundrum that Uber is going to have to figure out over the long term. But right now we're gonna have to see how they navigate this. Tesla still down 1.19%, Costco 947, Microsoft 441, ASTS 2311, SMCI having a great day, up 7%. SMCI not stopping, so looking like that is having some momentum. Kris says you're a new Tesla cult member, so you're finding something wrong with them. That dude, first of all, I have 10 shares. I don't think that classifies me as a Tesla cult member. It's not like I have so much money riding on Tesla that, I need Tesla to win, Uber to fail. Number two, I'm just trying to be dead honest about it. First of all, I do think Uber's undervalued. There's no question that Uber's undervalued just in terms of their cash flows. But the problem is the future growth expectations are starting to feel, from a qualitative perspective, limited if we think autonomy is the future. And Dara is not doing enough, at least for me in that interview, to inspire what I would say is the next revolution of autonomous vehicles. So that's why it's not about being part of the Tesla cult. It's just logically, now that I drive FSD, I was driving FSD this morning. It's incredible, dude. Why would you need to call someone to drive you if the robotaxi can do it? It's far away, but it's coming. And we know it's coming. All right, let's call Kris. Let's get him on the phone and get him part of the show as well. Kris Patel. All right, Kris, I'm calling you right now. Why is it not letting me call you? Hold on. Phone. Okay, cool. It's calling you. Kris is trying to feather his way onto the stream.
What's going on?
Kris, what's up? Good morning.
Yeah, man, I just came to gloat a little bit, just letting y'all know about SMCI doing well. That's good.
See, when you take a victory lap like that, when you gloat, people want it to drop on earnings. This is the problem.
I know.
This is the problem, Kris. Now people want this shit to tank.
I know, which is fine because I'll buy more of it.
Okay, so let's talk about that first. Why don't you give me a little bit of in a nutshell, SMCI thesis? Why are you so bullish on them?
Okay, so one of the things that we've been talking about this in our private group. You have to read the short report and figure out what are the main complaints about SMCI, and then you take its current business and then you ask yourself okay, what are we actually dealing with? Are we dealing with real fraud where things are going to go to zero, or is this something that's a temporary or a short-term stain that can be removed in the future, right? So if you're a complete fraud, that's one thing. People will acknowledge that, and those frauds will, eventually make its way into the numbers, and eventually you'll get pummeled because your product is not really real. It's vaporware, right? So if you go to certain pharmaceutical companies, pharma companies have this tendency to overpromise on how their drugs are going to do, but then when the trials actually come out, it ends up being completely false. So if you look at the Theranos of the world,
Did you say Theranos? It's Theranos.
Theranos, whatever.
You just pulled in a mitt there on the pronunciation.
You actually had to correct me for my pronunciation.
Yeah, that's how you know it's bad, bro.
How the world is flipped, right?
Yeah.
Okay, so yeah, things like that, or Berkeley Lights was another one that overpromised, and then they ended up getting knocked out. So the key is you have to look at this short reporting from the angle of what is their main complaints. One of the chief complaints that Hindenburg came up with was that they are recognizing the revenue aggressively. So basically, a lot of the growth that's we're seeing in the numbers, it might not actually be as accurate as what's actually out there. In the past, they had a similar finding, and that similar finding ended up, being hey, look, if they did it in the past, they'll probably do it again in the future. And so that was one of Hindenburg's, one of their chief complaints. Now, they're in hypergrowth mode, and you can see how crazy they are when it comes to building out the data centers and infrastructure. They're one of the core suppliers for this AI infrastructure play. So the question that we all have to ask ourselves is, okay, is aggressive accounting something that could be fixed? Absolutely. The new auditors that are coming in there, they can say, look, these are the processes that you used to follow. And, there's a little bit of questionable practices here, but let's change it up. let's actually utilize a new accounting standard and we'll recognize revenue based on X, Y, and Z that's a little bit more favorable to what investors expect and the SEC and everyone expects. And, if we have to restate some of our revenues, we'll restate our revenues. But the thing is, they're in hyper growth. So yeah, if they have to basically restate a few percentage points, like, oh yeah, we didn't grow 100% last year, we only grew 89%. Like, who gives a F? The stock is down 80% from the highs. So it's like, dude, it's easily something that can be corrected, even if it's restated. The product is actually there. It's flying through the roofs. It's flying through the shelves. Like, you can actually see data centers and everyone adopting these things. And
what was your reaction to the 500 billion Stargate thing, and what implications do you think that has on AI capex writ large?
Well, it just goes to show that AI capex is not slowing down anytime soon. Whether that be the next, and this is like a 4-year spending cycle. Like, they're talking about spending 500 billion over 4 years, right? And that's outside of the other hyperscalers already doing it. And it's something I mentioned yesterday. Inferencing is where these guys are going to be making a crap ton of money, right? So think of the current data center. Like, I have to explain to people like how these cloud like hyperscalers, they are the modern day real estate. They have like a modern day real estate kind of like investing like framework, right? So what happens with real estate? You buy a plot of land, you build a building, and then you rent out either homes, offices, whatever. These guys are doing the same thing, but they're doing it in the digital space, where Amazon, Microsoft, Google, they're buying up data, they're buying up land, putting up data centers, and then renting out the compute, right? And the thing is, the demand for that compute is insatiable. With regular real estate, you're limited by the number of population that's growing and demands for that. With compute, it's like an unlimited runway. Like, I don't even see an end to a runway. Can you see an end to a runway where we're going to be like, oh yeah, you know what? Maybe we're not going to use as much compute.
I don't, but then I have a question. Why would you buy SMCI over NVIDIA if you believe in that?
Because the valuation.
No. But NVIDIA, you don't think, if you think the runway for compute is endless, NVIDIA is going to 200 like that, like, unless you think 150 is the top for NVIDIA, which
it's just a valuation thing, man. Like, the valuation on SMCI is super undervalued right now relative to its importance in this AI space. NVIDIA's valuation makes sense. NVIDIA, like, if you want to market perform, you buy NVIDIA. If you want to outperform, you buy SMCI, because SMCI is sitting at a much, much lower value than what it should be trading at if they're able to deal with these accounting issues.
What do you think the fair value is? 50 roundabout?
I think it's like 75 plus, but then again, I don't know, because it's all about consumer trust, right? If these guys can rebuild the trust among investors, this thing will ride up again, So for me, when I look at it, I think trust is easier to get, especially if the AI hype cycle is real. So, like, we have to remember, even if you're bullish on the company, you have to always weigh the valuation. And when valuations make no sense to the downside, you should be buying. You really just have to go back to the philosophy of buy when people are selling and people are, like, scared.
Well, hold on. So Jed has a good question. Why weren't you buying SMCI at 17 then?
I didn't do enough research on the short report. I have a limited amount of time where I can do all this stuff all the time.
No, that's fair. That's fair. I'm just saying, like, at 30 is like, what piques your interest is what I'm basically trying to get at. How did this randomly?
You're never going to nail every single bottom. You're never going to nail every single top. You're never going to nail every single company. And sometimes things fall off your radar. And then you look back and you're like, wait a second, this should have been on my radar to begin with. You know? So I'm only human, dude. I only got 24 hours a day. I got a wife and I got other things going on. So, and the whole thing is this is why I got bullish on it. Someone brought it up to me and said, hey, Kris, have you looked at SMCI? Like, Ken brought it up on our conversation on our group chat. And I said, well, you know what? Let me take a minute and look at it. And as I looked at it, I was like, wait a second. Hold on. There's actually something here. Once they hired the auditor, their new auditor, BDO, and then, we spoke to a friend who is an auditor and said, look, this is probably not as big of a deal as people are making it out to be. And that's when you started to, like, adjust your thinking. So sometimes what happens is it's not necessarily just about, like, you need to know every single company that's going on and happening. You also have to know, like, you know, sometimes the timing is based on the information that comes your way at the right time, you know? So,
Yeah, and the point of my question is because the SMCI bulls, when they saw it go to 17, the ones who bought immediately thought the short report was bullshit, right? Just like any of us, if we're super bullish on it, like we've had Palantir short reports in the past, and we're like, all right, this is stupid. But for you, it wasn't really a revelation at that moment. It was more so randomly figuring out that, hey, there's this company out there that might be undervalued because of a short report. And then when you dug into the short report, you realize the short report is bullshit.
see, one of the things that I hope the community around they appreciate this fact about what you're doing. You know, there are always great opportunities out there in the market, but a lot of times people are not pointing the finger in the right direction. And if you make friends with the right people, they'll point you in the right direction. And then you make the decision, of course, yourself. But the thing is, the more you surround yourself with great investors, the better you're going to do. So if you're investing basically as like a solo person and you're basically looking through everything, looking for opportunities, bro, it's a sad, lonely field, and you're gonna spend a lot of time doing research. But if you have a core group of friends that you know that they're great capital allocators, that they've done very well in the past, they have a great mind for finding things, bro, you surround yourself with those people and you find those great companies that can help you boost up. Like, here's an example, like Nubank. Like Nubank, I was really, really bullish on it when it was $3-4. And what's his name? Tanner, I actually went on FinTech Frenzy with Tanner and showed him, and he loved it. He went with it, and he really did well on it. So it's kind of one of those things. Like, if someone doesn't point it in your direction, it's really hard. You know,
it's why people at the meetup were so happy to meet each other, because they could actually talk about things that we cared about.
I still remember when I brought up things like cruise lines to some of my friends. Like, some of them will be like, "Are you kidding me? Like, are you stupid? Like, bro, this pandemic just happened." You know. But then once I actually showed them the numbers, showed them everything, like, "Whoa, hold on a second. There's actually a lot of value here."
Yeah.
It's just, because what happens is we as humans, we have this tendency to just look at things at the surface level and basically make a judgment. And we don't look at the stuff underneath. And sometimes we're wrong, sometimes we're right. And it's our job to make, like, as investors, our job is to basically, find the people and the companies that we believe in, right? And then basically, if you don't believe in the person and you don't believe in their methodology, just, distance themselves. Because what's going to end up happening is they might keep you away from opportunities as well. So you have to keep yourself in a position where, you're finding people that have ideas that are similar to yours, methodologies that are similar to yours, but then also can help point in the same right direction. And trust me, there's value also in having friends that are critical about things.
Yeah. 100%.
So, yeah.
Okay, some rapid fire for you, Kris. Real quick. First off, is Netflix. Does it deserve a 13% pump right here?
Dude, Netflix is just on another level of growth. I don't know. I don't even know how they keep getting, but this is where I have to like kick myself a little bit and not understanding that the way that Netflix is that every incremental subscriber ends up lowering the cost basis on a per subscriber basis.
What do you mean by that?
Scaling laws are infinite. So here's an example. If you made $1 billion, like you spent $1 billion on a new TV series, like let's say Squid Games, right? Now, if you have a billion people watching it, that means that, let's say, it cost $1 per person, right? So the cost to you was $1 for that $1 billion that you got. Imagine, on the other hand, now you have 2 billion viewers, but the cost of that series is still $1 billion. So now your profit just doubled, right?
Right.
You understand what I mean? So
right.
As you scale up, you become more profitable because the cost of input is going to stay the same or actually going to increase just a little bit. But the value that you're generating goes up by a lot. And especially now, if you're buying back a fuck ton of shares, dude, that means that your share prices, even if let's say your market cap ends up being stagnant, your share price is going to explode. And right now you're looking at the operating income, operating revenues that Netflix is generating. I would say this is something that, like, one of my friends who like, because I'm eventually thinking about doing something like a hedge fund or whatever. I was talking to him. I was like, what's one of the methodologies that, like, retail investors get wrong and hedge funds get right? And they're like, well, if your time horizon is only in like 1 or 2 years, your investing is going to be like 1 or 2 years out.
Right.
But if your investment horizon like 5 years out, you have to look at it from that perspective. So it's like, okay, how much is Netflix going to be worth 5 years from now? What's the, like, if you look at today's PE ratio and Netflix might look a little bit expensive, but if you look at 5 years out and you combine all the share buybacks, you combine all the additional growth, this thing could be worth a lot more, Right. And that's where I think Bill Ackman, he had the right thesis, but I don't know what caught him off guard and tilted him away from it. But it's sad.
Okay. Next question. You said Microsoft needs to come down. It's up 3%. What's wrong with Microsoft?
Microsoft, for some reason, I always go back to that stupid earnings report where they came out and the first thing they did, we'd like to acknowledge that we are currently on land that used to belong to the Hopi, that used to belong to the...
Wait, they did that? That happened?
Yeah, dude.
When?
Yeah,
what quarter?
I think it was like a couple of... I think it was about a year ago or something. A year. Wow. Yeah, I think it was about a year ago. Like, dude, they were doing like land acknowledgements, and then they were like, every person would announce their pronouns and all those. And I'm just like, dude, like, look, I'm all for diversity, equity, inclusion, all that stuff to a degree. But then, like, you if that's like one of your main focuses, you're gonna create a culture where that is gonna take precedence over actual innovation, right? So I don't know, like Microsoft just rubbed me the wrong
You think that's a
way
bear case though on Microsoft AI in general, or you just don't like the company?
For some reason I've never seen Microsoft as like a very innovative company. I don't know why. Like they are innovative in some of the ways that they do their billing. I don't know if they're actually innovative in their products. Like I mean, Microsoft has this like crazy monopoly on like bill on Office and Windows and all this other stuff. And they're basically the most innovative thing they've ever done is like, yeah, we're gonna bill you like $10 more for the family Microsoft plan. And I'm just like, fuck you, I fucking need Excel. Otherwise, like get rid of all your shit, Yeah. So I don't know. And then like, I mean, Azure was a good play on their parts of the moving to the cloud was a good thing. But like, if you look at Microsoft, I'm not sure I see a lot of innovation for them. They don't take a lot of, I don't know. I mean, outside of ChatGPT and OpenAI, I don't even. Yeah, I just for some reason Microsoft just doesn't seem like that big of an innovative company to me.
All right. So last question for you: the Qs and the S&P are at almost all-time highs. Is this toppy, or is this we're gonna have another big year like 2024? What does your gut tell you on this moment?
I think you're just gonna have to be very selective. I think there are definitely like bull traps out there, and you just have to be very selective. Like the last couple of years, you could have just been in the indexes and made really good money. But right now, I think the next year is all going to be about like value being, there's going to be companies that are going to do really well and companies that are not going to do well. And the thing is, I think we're going to have like an even out year. So maybe like, what Tom Lee was saying about a 10%, up year. Now, what does that mean? That means that there's going to be companies that are valued really high that should be coming down. And then there's also companies that are valued really low that should be coming up, right? So this is where it's like a stock picker's market rather than just buy the indexes and hold, So if you go like 2008, 2009, you could have bought anything and you would have been up, right?
Yeah.
So stock selection wasn't necessarily the most important thing. And it was the same thing post COVID. Remember when COVID knocked everything out? You could have bought anything and you would have up, And then in 2022, it was like the mega caps were all low. So as long as you were in one of the mega caps, you freaking killed it, So I think this is one of the times where there's definitely like sector rotations out there. There's a huge underlying shift happening in policy. So some industries are going to benefit significantly from these Trump policies, and some might be dialed back. So this is one of those years where stock pickers will win and index investors may not perform as well, and it's rare to see that anymore, because now everyone just pretty much buys the index, and that's been like the methodology. But, if your goal is to beat the indexes and all this other stuff, you also have to do a little bit of homework and figure that out.
Okay. Actual last question for you. What are your top 3 positions right now in your overall portfolio?
Okay, so I have a ton of fixed income stuff that's just generating me really good returns, and you know what they are already. I don't have to keep relitigating that. But so fixed income is a big thing for me this year, because I feel like if rates come, will give me both the income that I want, but then also the capital appreciation, right? So that's one section. I have a ton of position in Google, SMCI, Nubank. I have Next Decade, which is my super long-term investing thing. And then just a hodgepodge of other little things. I still have all my cruise line positions, which are doing really well. I'm hoping that the Decembers eventually come out, in which case I'll what is that thing called? Roll them forward. Because I still think like cruise lines still have a long way to go higher. So I'm just patiently waiting for that. Grab is a good position for me as well. The Grab is probably the most speculative among mine that I'm like, yeah, we'll see what happens. But then again, I also got a good price on this. So I'm not like too concerned with it.
Right.
SMCI, like in the short to medium term is gonna be a big thing for me, because the way that things are happening with what I just explained earlier. And yeah, there's like a hodgepodge of other little things that like I have that, are pretty much just like things that I talk to my Patreon members about and stuff. Yeah, and we just, whenever there's opportunities, I post it. And sometimes I've been a little bit like, I've been hit with a little bit of writer's block. So I'll tell people like, hey, listen, this is worth looking at, but I haven't like published a whole like data series of things that I've
a deep dive
that shows. Yeah, because that's what I do, right? I you saw like when I put in like the work on CCL, it was a lot of deep diving on there. It wasn't as simple as, okay, yeah, this is a good place to be. It was like, no, this is the reason why you want to be valued, why you should be in it. Same thing with like TFC last year. Remember that? I think I wrote like, I don't know, it was like an entire freaking.
It was a good 5 to 10 pages on TFC.
Yeah, and it worked out, right? It paid off so tremendously for people. Yeah. So I think that's the key. Like, there's some things are going to be very like detail oriented, where you have to like go in the nitty gritty of things, and other things are just going to be like, hey, look, this is the core thesis, and if it plays out, it plays out. If it doesn't, then it doesn't.
There we go. All right, Kris Patel, thank you very much. We appreciate you every day. We'll talk to you tomorrow.
Thank you, man. Yep. Have a good one. Take care.
You too. All right. So Kris's top positions are Nubank, Google, Grab, SMCI, and the cruise lines. Next Decade, I think, is more of like a long-term play, but it seems like those are his top 5. Market's still green, folks. Palantir doing its thing, kind of just silently going up 3%, 75.44. Let me check resistance at 76 on Palantir. Obviously benefiting from that NVIDIA, Stargate, AI, CapEx spend that the market believes is going to be massive. 76 for Palantir is 68,000 shares. It's a decent wall. It's not massive, but there is a bit of a wall there. Again, guidance in a couple days or next week. That's going to give us pretty much everything we need to know in terms of the trajectory for Palantir. And I think they're going to guide above 30%. I really do. I think 2025, they're going to guide above 30%. The question is how much they guide above 30%, and that's going to determine a lot on where the stock ultimately goes from here. Yeah, the strength in Palantir has been pretty amazing, dude. Pretty freaking amazing. Like 63 looks like, at least for now, was the bottom. I think earnings will be the determining factor. If we get a dip because of the SARS miss, I think that's to buy the dip, because I don't think other parts of earnings are going to suck. I really think earnings are going to be very good. And if the headlines are Palantir misses 90% on EPS, which again, it happens, right? We've seen it happen time and time again in the market where you miss on EPS for whatever esoteric reason and the stock drops. I think that's a very easy buy the dip if that's the only reason the stock drops. If guidance is below 30%, I think we can get the stock to drop as well. I just don't believe they're going to guide lower than 30%. I personally don't believe it. I think it's going to be in that 32 to 34%, and then they're going to sandbag every quarter, and then end of year, I think they top out at 40% growth. So that's kind of how I think the trajectory plays out. And if so, that should be able to keep us in this range and continue to normalize the expensiveness of this valuation, and then eventually grow into the valuation in and of itself. NVIDIA right here, 146. You got ASML 779. Wow, hoodie still holding well above 50, 50.75, up 1.44%. I think it touched 50.80 at one point. So, I mean, if it holds this throughout the day, that's going to be 2 days in a row of maintaining the 50s for Robinhood. Nike recovering after Adidas earnings. Did you end up buying it? I did not buy Nike. I'm not excited to own Nike, to be honest. It's one of those things I don't want to look at in my portfolio and have to do research on them. The dividend's also not exciting either. Like, you're buying Nike because you think that there's a recovery play. That recovery max gets you to maybe 100, 110. But how long will that take? I think it's going to take a while. I don't think this thing's going to 100 anytime soon. And then it's a 2% dividend. Like, if it was a 5% dividend, I would get a little bit more excited for it. But I don't know. It's not that interesting. The only other reason I would buy it is because of Bill Ackman, because he's like balls deep into Nike. But now I'm curious if he's still that deep into it or if he trimmed, and we'll find out in like 2 weeks, and we'll see if he's doubling down on this position. That's kind of crazy though, right? In this economy, to trim Google and to put $300 million or whatever into Nike out of all names, like with all the opportunities, the fact that he's doubling down on Nike to me has been very surprising. And I'm curious to see if he keeps going that route. Today could be the first day where we get a $50 open and a $50 close on Hood. The stars are aligning low-key. Yeah, I mean, they're executing. They're doing what they got to do, and the street's starting to really, really recognize that. ASTS right here, 2347. Microsoft 439. That's still up 2.5%. Is Tessie red? Tessie is going green. It was at 415. Now it's at 422. Down about 0.5%. Okay, cool. Let's listen to Jamie Dimon. He was at Davos as well, and he's sounding a bit more excited about Elon Musk and his trajectory as being one of the best business leaders in the world. So let's listen to him, and then we'll keep going from there.
I'm curious what you think about Doge and what Elon Musk is doing. You've had a frenemy, complicated relationship with Elon Musk over the years, given lawsuits and other things back and forth. What do you think of his role in all of this, and what do you think Doge can actually do?
Elon and I have hugged it out.
You've hugged it out?
Yeah, he came to one of our conferences. He and I had a nice long chat. We've settled some of our differences, and the guy. I mean, you got to look at Elon. I mean, SpaceX. I mean, Tesla. Neuralink. The guy is our Einstein, and so and I like to be helpful to him and his company as much as we can. I think it is completely rational for someone to look at our government and say it's been ineffective. Of the grievances, I would say that you have inner city schools and educations. Income didn't go up for the bottom 20% for the better part of 20 years, literally until the tail end of Trump's first administration. But we deserve good government. And I don't think anyone thinks sending another $1 trillion to Washington, D.C. will lend to good government. So government needs to be more accountable. It needs to be more efficient. It should be outcomes based. I mean, I say department by department. So I wish them the best. It's going to be complicated. The federal government's complicated. You read about all the people in it. And so, if we could be helpful to them, and I'd love to be helpful to them.
Let me ask you about the bank, because it's on fire. Profit rising 50%, $14 billion in the fourth quarter, which is extraordinary. Where are you? I mean, one of the things you've done over the years that I'll give you enormous, without pandering you, I'll give you some credit for a moment, which is obviously the bank is stronger than it's ever been, but you've been very opportunistic about buying things and being in a position to buy things when the moment arises. First Republic being the last example, but of course during the financial crisis. I'm curious, when you think about investing now on behalf of the bank, what you even look at.
Yeah, I don't think doing a big deal is like in our cards. And some of those were done to help the United States at the time. They weren't necessarily done for JP Morgan. And we have great people. I mean, a lot of them. I mean, they're just, I feel blessed with that. So that's the beginning thing. And obviously, if you don't have good people, you're not going to have a good bank. And at the end of the day, that is the number one thing. But in terms of investing, and I could go country by country, area by area, and think we can actually invest and grow. And investing shows up as bankers, physical locations, and technology and marketing. So we spend a lot of money in marketing to create new cards and stuff like that. So we think we can gain share in investment banking, wealth management, retail, small business. We still have big pockets of, Daniel Pinto always talks about the yellows and the reds where we're not very good. That could be, FX.
And obviously banking has worked out very well for Jamie Dimon and for the entire banking sector. We got the ARM CEO as well. ARM is up 17% today. ARM's up 14.7%. Let's hear from him on what this Stargate thing is going to be doing for their business.
People who are in the room. Sure. I think that Renee Haas has been, by virtue of the fact that political, but Stargate seems to be suddenly jumping ahead of everybody in terms of its importance here.
Good morning, Jim and David and team. It's a pretty big deal when you just think about the scale of investment that we're talking about. $500 billion. I think it's probably the largest infrastructure or any investment of any kind in history. And AI, and we've talked about this a lot of times, requires it. You need a tremendous amount of energy. You need a lot of land. You need a lot of compute. And you need low power. And that's where ARM fits in. But it's a big, big deal.
Okay, so compute, when I hear it, says to me that your friend Jensen Huang, NVIDIA, is going to be the major player when it comes to that. Can you shed a little light? I know that that Jensen wasn't available or talking about yesterday, but he's kind of the elephant in the room, isn't he?
Well, technology partners that were announced were Microsoft, NVIDIA, ARM, OpenAI, and Oracle. And of course, NVIDIA's Grace Blackwell, which we've talked about many times. The CPU there is ARM. The GPU is Blackwell. They're going to be the primary technology partner off the bat. With $500 billion of investment and just the amount of problems that need to be solved over time, I think there's opportunities for more players. But right now, yes, it's a great day for Grace Blackwell, and then it's a great day for ARM. It's also a great day.
I'm sorry.
Go ahead. No,
Look, I hate to get too granular on this thing, and I know it's not really your world, and I'm putting you on the spot here, but we're trying to figure out OpenAI's relationship with Microsoft and OpenAI's relationship with Oracle after yesterday, because I had always thought that it would not be, and Dave and I can talk about this, that OpenAI was Microsoft, and now it looks like that the OpenAI is partnering with Oracle, and that would not be something that I would have thought was going to occur 48 hours ago.
Yeah, it's probably an area that Sam and Satya should comment on rather than myself. But
right.
I think one of the things when you look at Stargate has been the vision of Masa and the vision of SoftBank to be very instrumental in making this happen. Masa-san is the chairman, and as a result of that, I think he has been very integral in making this happen. And this obviously also would not have happened.
So lots of money. Now, Elon is not that bullish on this. This is what Elon said. Take a look at this. Elon responded underneath OpenAI's Stargate post yesterday. They don't actually have the money. I mean, that's kind of wild. He says SoftBank has well under 10 billion secured. I have that on good authority. So Elon's calling BS on this idea that they're going to be deploying $500 billion of capital over the next 4 years because they don't actually have the money. I don't know what he means by they don't actually have the money. Maybe he's saying that they're not liquid for that much money and this is all just like a show. But it's also kind of weird because Elon and Trump are boys, right? And Trump wants to promote, his presidency as all this money coming into the economy, and Elon's over there saying, actually, no, that money's not coming. So it is kind of confusing, the nuance reading between the lines right there. Palantir 75.97. We did hit 76. Looks like it's about to hit 76 again. HUD 50.81. Wow. But it is kind of weird for Elon to be just blatantly saying they don't have the money to be able to do this. Now, I agree with him. I don't think OpenAI has the money, but SoftBank and Oracle should have the money, and Elon's saying they don't. Also, Elon's really good friends with Larry Ellison. So that's another reason it's kind of weird he's saying they don't have the money, because he's kind of undermining Ellison's role in this whole Stargate announcement. So I don't know. It's weird. It's like it's undermining Trump because this is a big win for Trump. It's undermining Ellison, who's a good friend. Ellison, is he still on the board of Tesla? He used to be, I think, in 2022. But like it's just weird. I get why he's going after Sam Altman. Maybe his hatred for Sam is getting in the way here. He left in 2022. Yeah, he was appointed in 2018. So I don't know. We'll see what ends up playing out from there. But that was Elon's take on this whole $500 billion announcement. He's probably talking about OpenAI, yeah. But then he commented that SoftBank only has 10 billion secured. So why is he bringing up SoftBank if he's only talking about OpenAI? And if he is talking about OpenAI, does it even matter? Because I don't think anyone expects OpenAI to come up with 500 billion. They expect OpenAI to be the beneficiary of the 500 billion. And they're kind of the poster child for this, which is probably what's pissing Elon off, because he probably wants XAI to be in these discussions, not OpenAI. But, OpenAI so far still has the best foundation model, and they have the most users that are using ChatGPT over Grok right now. AR says, mark my words, this bromance between Elon and Trump will collapse before the summer. And that is a risk for Tesla. I personally think it's going to play out. By the way, Elon is confirmed to have space in the White House. He has an office in the West Wing of the White House. That was confirmed yesterday. So he officially will have an office that he can go to get work done. I don't think the bromance is going to end, but I do think there could be a risk that's out there. I think I give the risk maybe 5% of a chance. But if it does end, not the best for that relationship. I just hope Elon gets the deregulatory things passed before that relationship comes to an end, if it does come to an end. And that's in the context of autonomous driving, right? If he can get those deregulations officially passed and good to go, that's kind of what matters more than anything. Trump is up right now, the meme coin at 2%. Trump did talk about the meme coin yesterday, very briefly. This is what he said.
Benefited. I don't know where it is. I don't know much about it other than I launched it. I heard it was very successful. I haven't checked it. Where is it today?
They made a lot of money, sir.
How much?
Several $1 billion, it seems like, in the last several days.
Several billion? That's peanuts for these guys.
So, yeah. I don't even know what to say to that. Basically, that was the first acknowledgement we got from Trump ever on the meme coin. And he asked how much he was up. The reporter said they're up a lot. And he said, all right, well, that's not that much compared to these guys. So it is what it is. Let's get some more coverage on the Stargate stuff. We'll keep going from there.
$1 billion at least in a
plan. Some of the world's most prominent technology leaders pledging to invest an initial $100 billion, but it could be up to $500 billion over the next 4 years. And as you heard, the project is called Stargate. Kate Rooney's here to help break down what it means for OpenAI, one of the important partners of it. Steve Kovac also looking at Microsoft. And Steve, I want to start with you. We spent a good amount of our 9 o'clock hour at the top of the hour discussing the implications for Microsoft of what appears to be sort of a deepening connection between Oracle and OpenAI and the expiration, so to speak, over time of the exclusivity of financing by Microsoft. So what do we know, or what do we surmise here?
Yeah, David, this is what we're seeing. It's Microsoft sort of losing its grip that it once had over OpenAI. Until yesterday, it was the exclusive cloud provider for OpenAI, the hottest startup on the planet. And now, instead of being the exclusive provider, it has what they're calling the right of first refusal. So OpenAI says, they'll come to Microsoft saying, we need this cloud capacity for X, Y, and Z, what we want to do. And Microsoft can now say, we don't have the capacity to serve you. You guys need to go somewhere else. It's very clear they're going to Oracle right now, but this also potentially opens up the window for those other hyperscaler companies we talk about so often, Google and Amazon, even smaller players like HPE and Dell. They can all get in on the game as well. And that's also what the Stargate thing is about, is OpenAI using its own money and its own cash to invest in cloud capacity. And you might remember, David, we've heard CEO of Microsoft, Satya Nadella, say several times throughout the last year that they literally don't have the cloud capacity to keep up with the enormous demand they're seeing for artificial intelligence. That's not just OpenAI. That's other open source models. That includes Meta's models and so many other models that are also running on Azure cloud servers. That's why Microsoft said they're going to spend $80 billion in its fiscal year ending at this summer just to build out AI infrastructure, half of which is going to be happening here. And so all that money is effectively, yes, going to go towards NVIDIA. This is great news for NVIDIA and all these other companies. But what we're seeing now is Microsoft lose.
Palantir up 4%, really getting above 76 right here. 76.11, trying to hold on to these levels. If we get to 76.50, then we may have a shot to close above 76 today. But Palantir right here up 4% on the day at 76, being one of the beneficiaries from the Stargate announcement.
Using that exclusivity on the cloud, it makes a lot of money from having this cloud deal with OpenAI. The more OpenAI activity that happens on Azure cloud servers, the more money both companies end up making. So this is potentially them just because they don't have the capacity to do it, they can they're kind of ceding some of that potential revenue growth to other cloud providers.
Yeah. Kate, from the OpenAI side, I mean, do we have a sense? You know, there have been, and I'm sure you've heard it, talk in the marketplace about a deterioration in the relationship in some way, but do you have any sense as to what the conversation was? Was it OpenAI saying, hey, we need more, you can't give it to us? Or I don't know, you tell me.
That's what I'm hearing from sources, David, is a little bit of the lead up to this. And it's that capacity that Steve talked about, the demand, and you're seeing that spill over to Oracle. One interesting thing I'm hearing from sources out here is the relationship between CEO of OpenAI, Sam Altman, and Larry Ellison. So that has gotten closer since they first struck this partnership back in June. The two of them seem to be really aligned as with the big spending that's required with AI infrastructure. I'm told that personal relationship has gotten much closer, which is really interesting. The other thing I'm hearing, SoftBank is a big part of this, and Masayoshi, that's another personal relationship. CEO Sam Altman and Masayoshi Son, who, David, you know well, he's not an incremental thinker. Neither is Sam Altman. They've both really been banging the table for this level of infrastructure. They need this stratospheric level of spending. And another thing I'm hearing as well is that, yes, this would have been driven by the private sector. Had this announcement not happened at the White House yesterday, these companies still would have been pouring billions in. But it is a way to underwrite this type of deal, to say you have the confidence of the U.S. government, you have the support of Donald Trump, and symbolically, this was a massive deal for OpenAI and Sam Altman. If you think about the animosity, the feud between Elon Musk and Sam Altman, that it's been so public. Musk, of course, a key advisor of President Trump, and Sam Altman got his moment yesterday. It was sort of his debutante moment up there at the podium with Masa, with Larry Ellison, and getting the approval of President Trump. There was this open question: what is OpenAI's role going to be in this new administration? Are they going to be iced out of these sort of deals? We got proof yesterday that is not the case. Sam Altman, President Trump called him the leading expert on AI. So that was just a big moment for him.
Yeah, Elon probably didn't love that. Elon probably didn't love that Sam Altman was on the podium. You could tell Sam didn't want to be there, bro. Sam was like, you could tell he was kind of jittery, didn't really talk for a long time. Trump had to ask him to say more words. He got up for 30 seconds. Trump was like, well, can you talk a little bit more about this? And so, I don't know. It was a little bit awkward of a conference, but nonetheless, Sam just raised basically $500 billion. And that is why even at $150 billion, I think OpenAI had plenty of funding, because people do really think OpenAI is going to be $1 trillion one day if their foundation models are the clear winners. Also, Google invested $1 billion into Anthropic today. So you got even more momentum from the hyperscalers piling in money to these foundation model creators, and they're continuing to get a higher equity stake. Amazon, I think, owns the majority of Anthropic. They have like $8 billion that they put into them over the past couple of years. Palantir 76.23, not bad, up 4.3%. That is nice to see. AR says the NASDAQ has officially broken the downward channel and reversed to an uptrend thanks to Technical Tuesday. I love it. Learning some of those skills and applying them right here. NASDAQ 532.4, that's up 1.45%, which is very, very nice to see on the NASDAQ, given how heavy it is in tech. S&P should be at 607, S&P 606.9, that's up 0.64%. Hoodie, again, 51 doesn't have that much resistance, 50.82, so maybe there's a shot it gets there. Palantir 76.22. Let me check resistance for 77 on Palantir and see if that's attainable. And then NVIDIA still holding on to its gains as well at 147 right now. 77 for Palantir is, we've got 43,000 shares. 43,000 shares. Again, not a ton. Really not a ton. It is very, very possible for Palantir to hit 76 and Hood to hit 51 if the volume comes in. Yeah, NVIDIA is being really strong, bro. 147 on NVIDIA. I mean, maybe this is a momentary pump for Stargate, or there's a little bit of a NVIDIA getting ready for earnings pump going into the end of February. All right, what do you guys think is okay? So if you were going to sell a call on NVIDIA, what strike would you sell a call on NVIDIA after earnings or before earnings that you think would be appropriate? Like, I feel like selling a 150 call on earnings, there's a good premium, but there's a good shot it gets taken away. But I feel like selling a 180 call might be too aggressive, because it'll be hard for NVIDIA to get to 180. Like, what would be that range where you'd feel comfortable the shares don't get called away even if it pumps? NVIDIA tends to dump on earnings, though. The past 2 quarters, they've dumped almost 8%. So this trend might be the reverse. Also, the risk right here, the rumor here is that Blackwell is going to do $9 billion of revenue. I think the information reported that yesterday, which if Blackwell shows $9 billion of revenue for Q4, I mean, that would be insane. That'd be massive. Palantir right there, 76.40. There you go, 4.5% on Palantir. Most of you guys are saying 165, 160. I feel like 165-ish is fair. The premium's not going to be great, but the premium's not going to be horrible. 175, I feel like the premium is going to kind of suck. I don't know, dude. Is NVIDIA going? Because again, NVIDIA is still a big company, dude. 3.5 trillion for this thing to move up 20%. We're talking about multi-$100 billion getting added to the market cap, which I don't think NVIDIA doesn't tend to do that in one day. They tend to take their time and naturally goes up versus like a one-day pump and then it sustains it. Whereas Netflix, by the way, Netflix is the quintessential one-day pump and sustaining it. While, oh no, they're actually giving some of it back. Netflix was up 15%. Now they're up 10%. So it went from 980 to 962. People take some profits on Netflix. Yeah, I think I will sell puts on NVIDIA before earnings, 100%. I probably will sell something that's just out of the money. Like if NVIDIA's at 145 before earnings, I'll probably sell puts at 140. So I will definitely sell some puts going into earnings, and then we'll see how that plays out. I think 20% upside is reasonable. Yeah, selling at 20% upside, selling the call at 20% upside, because NVIDIA pumping 20% off in earnings. I mean, it would have to be one of those quarters, bro. It would have to be one of those quarters for that to happen. 165 is paying 340 a contract. That's not horrible. That's not horrible at all. Dookie Pie, thank you for becoming a channel member. Appreciate it. Appreciate your name as well. Thank you for becoming a channel member and being part of the show. I appreciate it. What else do we have? What other headlines do we have going on? Those were the main headlines, the Stargate thing and Netflix. I think. Oh, we did have some earnings. Let me show you guys a couple results, and then we'll look at those stocks. So we had Procter & Gamble. They had a good earnings. They beat on the top and the bottom line, 188 versus 186 EPS, and then 21.8 billion versus 21.5 billion. Their stock is up 3%. That's nice. And then we had Johnson & Johnson, 204 versus 202. That's a beat on EPS. 22.5 versus 22.45. That's a beat on revenue. J&J is down 3%. J&J stock has been stuck for a while, but you do have a 3.4% divvy. But we got beats across the board, pretty much on the major companies so far that have reported, which is very good. Very, very good. Option seminar will be on Saturday. Probably like 12 p.m., 12 to like 2 p.m. We're going to go through all the very, very basics of options, call debit spreads, selling options, buying options, all that stuff. You know, I actually gave this seminar to my family in India. It was like 1 a.m. though, and it was like 1 a.m. to 3 a.m. and it was a bunch of me, my uncle, a bunch of other people. So I did this before, but this time I'm going to have slides and like make it a little bit more professional. And so now whenever anyone asks about an intro to options, this video will be the perfect video to hopefully link them to. And so, yeah, that'll be on Saturday, 12 p.m. And we will, we'll talk about that. Amit, can you share on your financial and career journey? Curious. So I've talked about it before, but I had a consulting firm out of college. The consulting firm was rooted in teaching people debate and public speaking. And I started doing that as soon as I got out of high school. NVIDIA right there, 147.8 or 0.18. And out of college, I didn't get a job. I just had a couple clients. I just kept extending those contracts for about 2 years. Got into YouTube in 2021, invested in Palantir in March of 2021, then kind of really invested in November 2021. And then obviously 2022 happened. And yeah, and now we're here today. I've been doing YouTube for the past couple of years, and that's it. It's just, it's been one of those journeys where you surrounded yourself, as Kris said, with a lot of mentors. Kris, Steve, all been pivotal parts of my investing journey. Content creation, I think naturally I've always wanted to create content. YouTube just became a good outlet for me to create that content. Finance, obviously I'm interested in, so finance plus content, put it together, and then it turns into this. And kind of went all in on streaming in January of last year. Last year was when I was like, all right, let's go for like making it serious. And now we're here today. So that's kind of the journey. Also, I still have some of those clients that I coach in that consulting firm. That's why I'm actually going to California. I'll be at the University of Berkeley at a debate tournament in mid-February. So, by the way, guys, we got a big interview coming up in February. We got a big one coming up in February. So That interview will also be happening in California at the headquarters of a company in California. And so that officially justified another reason to go to California outside of the debate tournament and outside of the meetups. We now have another reason to justify it. So that one probably will be out late February. But yeah, it's not Elon, dude. It's not Elon. One day it's Elon. I think Elon's way too busy to do interviews right now. He's just like he's running the country basically. But one day we'll try to get Elon, but it's not Elon. But it is someone pretty important, and it'll be fun to do that. But yeah, so mid-week, mid-month in February, we'll be in California. We'll have the Palo Alto meetup. I'll meet a bunch of people I have to meet there. We'll do the interview, and then I'll be at Berkeley. So I'll be at Berkeley's campus for like all of the Valentine's weekend. So if anyone's near Berkeley and you want to just come by Berkeley, you'll probably see me walking around campus down in that area. It is not meat, Kevin. It is not carp either. It's not carp. Where's Palantir? Palantir 75, 77 just went down from 76. It's not Sam Altman. I don't think you guys are going to guess it. It's not as easy to guess as last time. Everyone guessed Vlad last time, and I had to be like, no, well, you guys are. I was like, it was so obvious it was Vlad. This one's a little bit different. It's not the Grindr CEO. It's not Vlad, bro. It's not Vlad. I'm not going to Robin, even though their headquarters is in the Bay Area. That would be fun though to do a visit. Maybe I should hit them up and be like, yo, can I come to the office just to see what it looks like? That'd be fun. I'm gonna be there for like a week and a half, bro. I'm gonna be there for no, not a week and a half. I'll be there for 7 days. I'll be there for a week. So it would be fun to go see some of those offices. It's not Kathy Wood. Vistical, thank you for the $20 super chat. Thanks for all your research on Palantir. You have helped us make a lot of money. Hope to see you in Houston. Now pronounced Toronto. Of course, I'm going to say it wrong. Thank you for that, Vistical. Appreciate the $20. And congrats on Palantir. That's another thing a lot of you guys said at the meetup. I mean, I sometimes I forget how many people were actually watching the videos when Palantir was $7. Because at the time, YouTube wasn't as big for me, but still there was a couple thousand people tuning in every day to the videos, and people were buying Palantir at $7. And I got to meet a lot of those early people at the New York meetup. And I think I'm going to meet a lot more of you as we travel. So I even forget sometimes that like, I know I always say Palantir is what made retail. I mean, retail got rich off Palantir, but retail really got rich off Palantir, bro. Like when we talk about a 10x on a stock, with people loading up thousands and thousands of shares underneath $10, life-changing, absolutely life-changing. So it just warms my heart every time I hear that. But people took the risk and they trusted in Carp, and Carp got us to this point. It is not Chamath, bro. Chamath's never going to do an interview with me. He hid my reply on Twitter. I asked him, what does he think about the Trump meme coin? And I asked it in a respectful way. I didn't even say it in a mean way. And then he hid my reply from his post. I was like, dude, how rich do you have to be to still hide a reply? Like, how insecure do you have to be as a freaking multi-billionaire to then hide my reply versus just responding to it and just like being a man about it? I would have been like, yeah, I don't like it, but still bullish for crypto. Easy response. Really? You had to hide my reply? Like, what? You know the replies I hide on Twitter? The ones that are like, contact Miss Laura Nicole for $5,000. She changed my life. And it's a Telegram group scam. Like, those are the ones I hide. But I don't hide a reply for someone saying, Amit, you're stupid. I'm just like, okay, like thanks for the feedback. I appreciate it. Because people can see when you hide a reply, by the way. People can see it. It says this post was hidden by the post's original author. So everyone knows you're hiding the reply. So if someone says something you don't like, it's like, all right, well, people are going to find out anyway. It's not like you can stop it from getting coverage. It was so weird, bro. It's like, dude, how rich are you? And you're hiding a reply asking you about the Trump meme coin? Like, what? I don't know. It was weird. But who knows? Maybe he'll forget it was my post, and then he'll do an interview with me one day. And then imagine I ask him the interview on the podcast. I'm like, hey, Chamath, why'd you hide my reply? I would never do that. But imagine I did. He just walks out of the interview. That'd be wild. I would love to interview him, though. Yeah, he's the man in the arena hiding replies, bro. Goodness. This is why he gets a bad rap, bro. He has all these audacious, bold statements, and then he hides a reply on Twitter about asking around the hottest topic of the weekend, which was a meme coin. Like, what, bro? Just like, I was flabbergasted. I was like, why is a multi-billionaire hiding my reply about a meme coin? Like, this got to be ridiculous. This got to be insane. This can't be real life. nonetheless, that's what he did. But who knows? Hopefully one day we get this interview. All right, let's hear from Beinoff. Let's hear from Beinoff because we got to get his thoughts as well on this AI revolution, and let's see what shots he ends up taking at Microsoft here.
I have spoken to him about his vision for how to cure cancer with AI, and he rolled it out yesterday at the White House. I'm extremely proud of him.
Do you think it's actually going to happen? The reason I asked is I don't know if you saw, but Elon Musk has been subtweeting that they don't have the money to do it.
I can just tell you, well, don't, it's kind of funny. I would always say, don't short Larry Ellison and don't short Elon Musk. These are, and by the way, they're two very good friends of each other. But Larry has a vision for the future of healthcare. And that's also why he bought Cerner. That's why he's been focused on these incredible Ellison Institutes in Los Angeles and in Oxford, England. And they have a vision that they're going to kind of use the technology that kind of was pioneered at Grail, where you get a blood test so you can see what's going on in your blood, but then use AI and then build therapeutics for each individual based on it. It's incredible.
Do you think this is going to impact?
Okay, someone said Sam just answered Elon. Let me go see what Sam said. What did Sam Altman say? Here we go. Let's see. I genuinely respect your accomplishments and think you are the most inspiring entrepreneur of our time. Wow. Okay, he said that 36 minutes ago. Wow. Yo, Sam is taking the high road, bro. He is not fighting back. He knows already he's kind of like, the public doesn't trust him as much, especially the Elon stands. They just absolutely hate Sam Altman. So he's going the opposite direction here.
Perhaps your biggest competitor, Microsoft, in that OpenAI was exclusive to Azure, and now they're going to be on other platforms. Does that matter to a company like yours?
I think it's extremely important that OpenAI gets to other platforms quickly because Microsoft is building their own AI, and I don't think that Microsoft will use OpenAI in the future. They'll have their own frontier models. They've said it very clearly that it's too expensive and too hard for them, and that they want to have their own. That's why they hired Mustafa Suleyman, and Mustafa Suleyman and Sam Altman are not best friends.
So you think this is the beginning of the fissure? Like you're actually this may be the moment.
I think that happened actually quite a while ago.
You think it happened a while ago, but in terms of
it actually happened a year ago here in Davos, where Sam and Mustafa were both on panels together and were, not getting along well, persona non grata.
One last related question: were you surprised at the deal insofar as you had Sam Altman standing behind the presidential podium? He, of course, is the great nemesis of Donald Trump's great friend, Elon Musk, your great friend.
This is a moment where we all have to regain our beginner's mind. So a phrase that I, cherished myself when I started my meditation this morning, this Japanese idea, shoshin, regain your beginner's mind. I think with this political administration, we're all going to need to regain our beginner's mind and see how things are going to play out.
So how's that been for you, though? I'm curious, actually, as somebody who's been a Democrat for many years, you have this election, you're seeing it all play out in front of you.
Yeah. I've actually never been a Democrat. I was a Republican for many years. I was in the Bush administration, and then I became an independent after that. And look, I have said I'm not a Republican or a Democrat. I've worked now with 5 or 6 different presidents. I can work with anyone. That is how I roll. That's important to me. I'll do whatever I can to support the administration, and I will, root for the United States of America. I'm an American.
What do you make though?
That's my number one.
What do you make of big
most
tech
important
going
thing.
to Washington though? Right now,
that is a moment. I think when you look at those
no, it is a
shots
moment. But what do you think?
I
of
don't
that?
think that
When you
I've
see
ever
that?
seen some of those images with everybody together. These aren't best friends who are all gathered together. It looks like they're having a party together. They're all actually, very serious competitors.
But there's some people
very serious.
There's some people who are very excited about that.
Yeah.
And then there are other people who say that they're bending. They're bending at the knee.
No. Number one.
How do you see it?
Number one, the United States of America has a tremendous lead in artificial intelligence and in technology. The vast majority of the frontier models, the AI, the research that's come out of our universities, and you're seeing that manifest into our tech companies. And that's what's incredible. And then you see that right here play out at the administration, where these are the leaders of all the most important companies that are all Americans.
One of the reasons I so desperately wanted to talk to you this year specifically.
I was muted. Sorry, I was muted. I just, dude, I did this mistake like 5 times yesterday. Oh my God. All right. I was going to say Meta's investing in Databricks. We'll talk more about that in a second, but Meta's investing in Databricks. Dude, I hate myself. I don't know what's going on. I don't know what's happening. A miniature. Yes. Amateur, a miniature. That's what's happening here.
Specifically here in Davos is, so many of the things that emanated here that you and I have talked about over the years that related around things like ESG and climate and other things. I think it's fair to say that Davos man is under attack, meaning those ideas, the vibe shift.
Well,
What do
first
you
of
think?
all, I don't agree. So
Okay.
number one, obviously Donald Trump and Klaus Schwab, who's the head of the World Economic Forum, are very close friends. Klaus Schwab and Donald Trump, they have a lot of time for each other.
Right.
And you're going to see Donald Trump here at this conference virtually, and I'm sure you're going to see him here next year physically. And he was here when he was president, 4 years ago, 5 years ago. And I think that, you probably remember that I worked very hard on the Trillion Tree Initiative. It's an idea that I had. I brought it
Announced it here
with Donald Trump. I launched it here. And I think you have to find your way with Donald Trump on the things that he cares about. And one of the things that he cares about is actually things like trees, oceans, air. If you listen to what he says and you focus on those things, you can make a lot of progress.
Let's talk AI, because that's the topic du jour here if we're not talking about Washington these days. And I'm curious where you think we are.
Now we're finally talking about something important.
Here we are. I saw Dario Modi yesterday.
Yes.
From Anthropic. And the timeline with which he's now talking about, something close to AGI is much shorter than I would have imagined, 2, 3, 4 years out, at a time where you've been making comments that, Microsoft's version of, OpenAI is like Clippy.
Yeah.
And so I'm trying to have these two ideas in my head that we're 2 or 3 years away from having to reshape society. And you saying that the thing doesn't even work.
Yeah, well, we already know Copilot has failed. You can see it has no adoption. It's just repackaged ChatGPT.
But that's not true.
Sure, you can talk to Gartner. You can read, these analyst reports.
That's a hell of a claim, bro. He's flat out saying that it has failed. I'm not muted, right? Oh, thank God. I'm not muted. Okay, good.
It's not what AI was meant to be. What AI is meant to be is what we were just talking about. The World Economic Forum, which is always use Salesforce as its fundamental data infrastructure, is running this year with agents. That is, we have agents and humans working together for the first time here at the World Economic Forum. And that's incredible. It's just making everybody's lives so much easier. So I have a digital agent that I'm working with. We just went through it on my phone. And I'm able to work with it, talk to it. It knows what sessions I'm interested in, it knows who I'm friends with. And I'm having a much better experience here at Davos. And that is what AI was meant to be.
So again, Mr. Beinoff is pretty bearish Microsoft. Nonetheless, Meta's bullish Databricks. So Meta's joined a $10 billion funding round for data analytics startup Databricks, signaling deeper connection on AI initiatives. Databricks works with Meta's Llama's open source AI models. This actually makes sense for Meta because the more they invest, the more Databricks likely is going to be implementing the open source models. They've now raised $14 billion in funding. The funds will support global expansion, employee liquidity, and ongoing AI development. Databricks also has $5.25 billion in a credit line from JP Morgan. Wow. Databricks is going to be the hottest IPO of the year. I know some people are saying when Databricks IPOs, it's going to be a top. But I think other people are saying, no. This data AI revolution is just starting, and Databricks is going to be one of the core players in it. And so it actually might be really momentous for Databricks to continue getting some momentum here, or to continue getting additional funding to expand as much as they can. So that's what we're going to see. That's what we're going to see happen with Databricks and its long-term trajectory. I do think they will IPO in the first half of the year. I mean, I think by June they should go public. If they don't, then definitely by the end of 2025. I don't think they would wait till 2026. Palantir's up. Are we up on Palantir? We are down from 76, but we're still up 3%. We were at 76, but now we're at 75.27. All right, guys, let's do some buying. Let's put some money to work. So there were some names that I wanted to buy, and I'm just going to flat out buy them right here. So first off, we're going to start off with Hoodie. Been buying Hood since $8. We're going to buy another 100 shares of Hoodie and get that out of the way. So there you go. Robinhood, $50.51. We are in. Hoodie has officially been bought in the 50s. No fear of this. If it goes down, that's fine. Just long-term thesis is very, very bullish on Hood, so don't really care too much. Okay, next buy. Let's do this. This is a Degen buy. No one follow me into this. I'm doing it for the group chat. We're going to go to Jan 2027 SMCI, and we're going to do a $50 call. So we got 2 years for it to get to 50. Probably will sell it if we get a nice pump after earnings. And we're going to buy 5 of these. We're going to buy 5 of these. So here we go. 5 of these $50 calls. It didn't fill yet, but the order's placed. We'll let that fill. We don't have to be greedy or impatient on that. This is literally so that Chris, Steven, Matt, because I'm not, I like, honestly, dude, I'd rather spend $5,000 than have them constantly brag about this because I'm not going to hear the end of it. I know I'm not going to hear the end of it. I know I'm not. Like, I already know how the group chat works. I know they're going to give me shit for a long time. So I'd rather just buy it. And I'd rather lose money than have them fucking yell at me about this. So there you go. We're in SMCI. We got 100 shares of Hoodie. And then we're going to start off the freaking DCA and get the job done. I wanted to do 10 shares, but we'll wait for the next 5 shares later. We're finally getting to Meta. We're here, folks. 5 shares of Meta. There we go. I wanted to do 10 shares, but I'm not going to do all 10 at once. We'll do the other 5 later. Want to get to 20 shares of Meta before earnings. So nothing too crazy. That'll be like about 12 grand. But let's get into Meta, officially do it. 628, probably the wrong price to do it. Doesn't matter. At this point, you kind of just got to bite the bullet and get in. And then you guys are saying Tesla. Dude, I've been saying Tesla. I've been thinking of Tesla as well. Fuck it. We're going to do 10 more shares of Tesla. We're doing it. We did 10 shares at 390, 10 shares at 422. Screw it. It is what it is. We're putting some into Tesla. Let's do it. There you go. 422 into Tesla. Either you believe it's a robotics and AI company or you believe it's a car company. It's one or the other. I tend to be in the latter camp. Average on Tesla now is 406. Average on Tesla now is 406. There you go. There you go. Okay, and the other one I wanted to do, but I still don't know if it's the right time, is SoFi. I wanted to get a little bit of SoFi before earnings. Is it tanking today? I know it was down. Are we down on SoFi? Do we just buy 100 shares here? 1745 down 3%. Screw it. All right. We'll get into SoFi. 100 shares on SoFi. Let's do that right here. And we'll get into SoFi. If it goes back down to 15, we'll DCA. The good thing about buying 100 shares is you can always sell a call against them. So we can always reduce these cost bases over time. And also these are good companies. SoFi, Meta, Hood, SMCI. The jury's out on that. We'll see what happens, but these are good companies. All right, so we bought 100 shares of SoFi. We bought 5 shares of Meta. We bought 10 shares of Tesla. We bought 5 leaps on SMCI that have not filled yet, but I'll let those sit there. They'll fill eventually. And then we bought 100 shares of Hood. There you go. There's our buying. I think that's enough buying for the week, bro. We bought a ton yesterday. We bought today. Again, I've had cash on the sidelines for a while now. Still have a decent amount of cash on the sidelines, dude. It's like we've got money to deploy. I think let's at least get through the rest of tech earnings, and then we'll do more. But there it is. Also, freaking here's the other thing. Again, that Japan rate cut that's coming up, along with this is what I want to show you guys. Did you guys know Canada's CPI tanked yesterday? Which was really nice to see, because it means that we are really beginning to see the global decline, at least in terms of the more developed countries, with inflation. That's another reason I feel a little bit more comfortable buying. Canada's inflation rate went to 1.8%. It's the lowest level since September, and it's below 2%, which is the magical target for the Federal Reserve of the United States. So if Canada's seeing some weakness there, I think the next CPI report, along with shelter and automotives coming down, continues to give us a little bit of reprieval on inflation fears in the United States. And if tech earnings crush, I don't know, it feels like the first half of 2025 shouldn't be that bad. Shouldn't be that bad, hopefully. What about your routine? S&P purchases, is QQQ in that routine? Yeah, I don't know, bro. I think what I'm going to do with that is I have to put like 20,000 into my solo 401k. later in the year. I think I'm just going to use that for my S&P and QQQ purchases because that's on Schwab, and I don't like using Schwab, so that'll be like the boring money. But on Rob, dude, if I see a share of the S&P on Robinhood, I'm gonna want to sell it and buy something else. Like I cannot have one share of an index on Robinhood because I'm gonna look at it like, why is this shit there, bro? Why is it not being used in a different way? So I think the money I put in my solo 401k, which this year will probably be like 25 grand, which is all tax deductible, by the way. So if you are self-employed, please open up a solo 401k. It is like the best tax deduction for entrepreneurs. I think that'll be all my safe money because I don't like using Schwab, and I'm definitely not going to be selling puts on Schwab. It'll be stuck in an ETF, and that's it. So I think that's what we're going to do for that. What broker do I use? I use Robinhood. I use Robinhood for the majority of stuff, but now we have a Schwab as well. Is that the only SoFi you have? No, we have SoFi options. That's why I've never really needed to buy the shares because the options, we got them at 7 and they've done very well. But I don't know, bro. SoFi, I'm not sold on earnings going to be crazy. I am sold on the fact that Noto is turning a corner and the stock's narrative is turning a corner. Am I sold that earnings is going to be when it gaps up to 20? I don't know. But if it goes back down to 14, that'll be an easy buy the dip. It's not too scary to buy that dip. And that's it. So the only degen move we made today was this SMCI thing. But outside of that, everything else is just good quality companies. And we got some more Tesla on the books. Now we're at 20 shares of Tesla. I think we should try to get that to about 200 shares, 300 shares by the end of the year. That should be the goal. Realistically, the goal should be 500 shares, but we'll see if we can get it there. That's pretty much it. What stocks did I buy yesterday? So I bought NVIDIA 100 shares, and I bought NVIDIA, by the way, 145, taking a little bit of a break right here. Also, put in the chat what you've been buying. Put in the chat what you guys have been buying as well. Google and Amazon, we bought some in-the-money calls. And NVIDIA, we just bought 100 shares. So again, for Google, people were kind of confused how this works. So let me just explain it right here. I bought a 150 call, but I paid $60 of premium, aka 6,000. So that means I'm buying the right to exercise the contract and buy 100 shares of Google at 150 by 2026, which means for this contract to work, Google needs to be 150 plus the premium I'm paying, 60, aka 210, by January 16, 2026. Now, Google's at 200 right now. The benefit of buying in the money and paying the higher premium is that you believe that the stock will get above your strike price or above the strike price plus the premium. I do think in a year and a half, Google will be above 210. And if it's not, then something's wrong with Google. So that is what we did there. And then in Amazon, we did it for 190, which means Amazon has to be about 245 by January 2026 because I paid about 58 bucks in premium here. And Amazon's at 235 right now. I do think, in another year, Amazon should be at 245. And if I'm wrong, then that means big tech did not perform in 2025. And with all the evidence we're seeing, it just feels like big tech is going to perform. All right, SMCI filled. There you go. We're into SMCI. I have no desire to hold SMCI, dude. If it pumps to like 45, I will sell it the next day after earnings. Unless their earnings are just like so crazy and like this thing's going back to 75 or something. But if Kris is as serious about its undervaluation, this thing should gap back up to 50 on good numbers. Because the only reason it's down to 30 is because of how horrendous the accounting issues have been and the lack of trust. If it deserves to be closer to 50, 60, I would have at least imagined 45 after earnings, after they get rid of all of the fears that the street has about the lack of transparency. If they can do that, this should be a quick run up and the contracts should appreciate nicely and we should be able to take profits on them. But the contracts are not going to be up like 300-400% because they have 2 years of expiration. So the time value on them is still the external value is still pretty massive. The volume on that strike went from 48 contracts to 101. People are following you. Like at this point, I know every time you say when you have, a bit of an audience, don't follow me, people are going to follow you. That's it. Like you can't control it. Having said that, you try to hedge against your comments, right? So, and I maybe I did that to a little bit too much of a degree with Palantir at 30-40 bucks. I was like, guys, I'm not buying it anymore. I'm scared. The valuation's getting up there. To be honest, I think most of retail ignored me at that point. They just kept buying. But I think that was justified, dude. Like, because I don't want to be the guy saying it's going to $100 in 1 year, even though it got pretty damn close. But I'd rather be wrong and conservative versus wrong and overly exaggerating what the story is, right? Everyone's wrong at some point. It's just a question of how wrong are you? And are you wrong within guidelines, right? So if you're wrong, you're wrong. But if you're wrong and you have a price target of like 80 and the stock's at 20, it's like you're really wrong and you kind of suck at analyzing stuff, right? But everyone gets stuff wrong. Same thing with Grab, dude. I think Grab's going to be a slow mover, but I'm giving it 2 years to get to $10. And the more due diligence I do on this thing, I really do think it can get there. But anyone who's buying it, whenever they say, why is it flat? I'm like, look, this is my thesis is it's going to take 2 years. And so if you're expecting this thing to be a rocket lab and go from 4 to 30 in a year, that's not happening. Not on this one. And if it does, I'd be more than happy. But I don't think that's going to be the case on this one. Speaking of Rocket Lab, 2889, that one is down 7.65% on Rocket Lab. Amit, do you hold the energy infrastructure stocks that Kris is bullish on? No, I don't. But honestly, next decade is one that I've been thinking of a lot. Again, kind of just following the liquefied natural gas theme. But again, this thing doesn't trade on anything, bro. It trades on like just pure sentiment around the industry. So like it was up 15% last week. Then it came down 10%. Now it's flat on the day. So I don't know. This thing is, if you buy it, you kind of just got to, it's kind of like the S&P, right? Just buy it and hold it and believe in the next 10 years it'll do well. I like owning shares I can sell calls against, bro, and I can sell options against. So like something like Next is not that attractive to me unless it's in my Schwab account and I never look at it. But if it's on Hood, I'm going to be looking at it like, why, how am I not, how do I make money off this, right? Like, why is it just sitting there? You know? Matt says Next does trade on Hopium. Guys, can we pressure Matt to buy 100 shares of Hood so I can buy 100 shares of Rocket Lab? Can we do this? Can we get the trade done? Matt, Hood was my big pick. Rocket Lab was Matt's big pick. We both were, I would say so far, relatively correct on those picks, outperforming. We need to do a trade. He needs to hop on the show. We both need to buy it at the same time. We need to do it. You aren't reading the chat. I bought a Leap on Hood for $40. When did you do that? Did you do that today, Matt? You did that today? How much was that Leap? A Leap had to be like $3,000 or something, right? How much was the Leap? $40. What, January 2027? Is that what we did, Matt? $40. That was 2,300. Okay, that's not horrible. That's not horrible. All right, so I guess I got to do it on Rocket Lab then, if Matt did it. Oh, Matt said you bought SMCI. I did Hood at the same. Okay, but SMCI was not the trade. The trade, I suggested this last night in the chat. I was like, the trade should be Rocket Lab for Hood. All right, fine. If Matt did Hood, then I've got to do Rocket Lab. I'm the sucker buying this thing at 28.85 after it pumped 30%. But I got to follow Matt. All right, so Matt spent 2,300. I'm going to buy 100 shares, spending 2,800. Basically the same. Here we go, folks. You guys have been asking for it forever. And I'm probably buying it very high because it pumped freaking 30% yesterday. But it's because Matt got into Hood. So there you go. There you go. I'm done buying for the week. 2 minutes later, all right, I'm buying Rocket. Only because Matt bought Hood, bro. If Matt didn't buy Hood, I wouldn't do it. But I got to do it. If Matt's buying Hood, I got to do it. All right. 28.91. This shit's definitely going back to 23, bro. It's definitely going to happen. But dude, what? Is it going to 35? Rocket Lab's going to 35 in the next week, bro. There's no way that was a good entry on Rocket Lab. There's no way. No way that was a good entry. I would be happy. I will, but honestly, to be honest, that made no sense. Honestly, to be honest, that should be on a t-shirt. Honestly, to be honest, I got a Tesla at 391 and we have not seen Tesla hit 391 since then. I bought NVIDIA at 139 and we have not seen NVIDIA hit 139 since then. Now, granted, we only have 2 weeks of data and this is, there's definitely not enough data to say I got the bottom, but who knows? Maybe we're never going to see the high 28s on Rocket Lab again. Watch Rocket Lab go to 27 after this. Like as soon as I end the stream, Rocket Lab's down 2%. Maybe we get the bottom on Rocket Lab. But this can't be the bottom, bro. It pumped 30% yesterday. There's no way this is the bottom on Rocket Lab. There's no way in hell this is the bottom on Rocket Lab. No way. Absolutely no way. I am not, there's no freaking way Rocket Lab is not below 28.91 in the next couple weeks, dude. Like I just refuse to believe that's the bottom after a 30% pump. If it is, I mean, I'm happy. I got 100 shares. I'll be up. But like, I don't think that's the case. But we'll see. We will see. All right, so we did a lot of buying today. We did a lot of buying. We did a decent. We got Rocket Lab in the books. We have freaking Meta in the books. We got SoFi in the books. We're up on Meta already. Meta, we got at 628. We're at 630, so we're up $4, which is that's money, bro. $4 is money. We got 10 more shares of Tesla. We got 100 more shares of Hoodie, and then we got SMCI. 5 leaps on SMCI. There you go. Now June can stop complaining about telling me to buy Rocket Lab every day as well. So there we go. Yo, Matt is so bullish, bro. What if you had just bought 100 shares of the next SpaceX? How awesome would that be, dude? Matt really thinks this thing is going to $1 trillion, bro. He really thinks this is going to $1 trillion. Damn, bro. With Amit just randomly buying stocks tells me we could be at the top. Okay, so I know it looks like that, but you guys got to remember, I've been sitting on a lot of cash, dude. Like, I've not been deploying my cash. And I remember what I said January 2nd, the day I sold my hood options. I'm waiting for earnings and CPI. I remember the day, January 2nd, I was like, I'm waiting for CPI. I'm waiting for the Trump inauguration. I want to see how the market interprets it. A lot of you guys were part of those streams in January. I remember pounding the table of like, let's just be patient. And I was waiting for tech earnings. CPI is great. Trump inauguration interpreted very strongly by the market, obviously. And then tech earnings with Netflix. I mean, I don't know how that's bullish unless the rest of the Mag 7 shit the bed, which I don't think that's going to happen. I think right now, although it's, it's more expensive than it was January 2nd, that's the price you pay for sleeping well at night, knowing you don't have to literally worry about if CPI is going to tank the market. And I'd rather sleep well at night and pay a little bit of a premium than, be jittery going into CPI, especially given how jittery I was in 2024, bro. Like, there were nights where I was just like it was tough to sleep, bro. Like, there's a lot of money on the line and you need a stock to get to a certain level in order for it to work. And you just kind of had to deal with it. So I'd rather have less stress, at least in 2025. Amit, you just copied Pelosi. Yeah, but that's actually smart, in my opinion. That's not a top signal. Copying Pelosi is what you should. Everyone knows we should be copying Pelosi every time. And I know that, but no one ever does it. Like CrowdStrike should have copied Pelosi. Freaking Palo Alto should have copied Pelosi. Broadcom, she bought those deep in the money calls at $80. Broadcom's at freaking $250. Should have copied Pelosi. I think when we talk about people having a good track record, if Pelosi's buying Google, Amazon, and Nvidia, all right. I mean, people might not love the logic on why you would buy it there, but if she's wrong, if I'm wrong, she's wrong. And so I do think she tends to be a little bit more right on the timing. Also, she does tend to buy deep in the money, so she gives herself a lot of room. It's just then the stocks go up so much that even in the money call options, dude, her in the money calls on Nvidia were at $12 that she exercised 50,000 shares 3 days ago. Now she bought them when Nvidia was 50. So essentially, for post-split reasons, Nvidia was 500 when she bought them. She got 120 calls, which means after the split, she bought them at 12. Nvidia was 50. Nvidia's at freaking 150 now. So even with buying deep in the money, Nvidia went up so much that she still appreciated very, very well. If Nancy ever buys an out of the money call option, that's how you know she's really bullish, because she always buys in the money to give herself a little bit of room to breathe. But if she were to ever to buy like Nvidia 200 call options, that's when it's like, okay, she knows something. She knows something real if she's going that heavy. She did buy Tempest as well, yeah. But Tempest was a $20 strike, so even Tempest she bought in the money. She never really goes super risk on when it comes to the options, even if she goes heavy into the deep in the money place. What else do we have? Jody, thank you for the 20. It's been a while since someone sent it. Thank you for the 20 pounds. I think I'm right on that. Thank you for the 20 pounds. Amid FOMO gets me pumped, bro. I appreciate you, Jody. And also, I don't have a lot of FOMO. I don't tend to get FOMO when it comes to this stuff. And part of the reason was because I was so concentrated last year. But now that I'm not as concentrated, I got to spread around the money a little bit. And at some point, I'm not going to be able to time the bottom on any of these, even though so far I've timed the bottom on all of these somehow. But I'm very much expecting all of these stocks to get hit 5-10%, and then we can DCA again. Was it a pound? Was I right? I was right? Okay, boom. I was right. There we go. We're learning. Where's Hood? Where is Hoodie? Hoodie 5044, up 0.88%. SoFi still getting hit today. Rocket Lab as well, down 7.4%. SoFi down 3%. Google 199. Nubank nicely above 12. If anyone bought Nubank Leaps at 1050, those are doing very well. Oracle's up 6%, and then Amazon is up 1.5%. There you go. There you go. Prashant, thank you for the $10 super chat. Maybe not 1 trillion, but we Rocket Lab shareholders are definitely heading to 300 share, which is a 10x within a decade. That would be a $120 billion market cap, if I'm not wrong. Rocket Lab is at a $14 billion market cap, so that would be a $140 billion market cap. Yeah, I mean, look, again, I don't know enough about Rocket Lab. I know I need to study more about Neutron, but just SpaceX's TAM alone, Trump wanting to conquer Mars, it should be in the right industry. It should be in the right industry. What else? Matt said I sold the $36 covered calls in Rocket Lab for next week for 37 cents. Now multiply that by a few hundred contracts. Yeah, that's the other good thing about concentrating in a portfolio, dude. Matt, I think Matt has like 20,000 shares or something. So, well, let's do the math on that. What's that? 20,000 shares. So that's 200 contracts times 37. Yeah, that's a nice $7,500 for Rocket Lab not going to 36 by next week, which I think is reasonable after a 30% pump. Hard to see it going up another 25%. That's the crazy thing about selling options, guys. This is why, like, you know, I know Chris is not a fan of them, but I'm like, okay, someone like Matt who has, let's assume 20,000 shares of Rocket Lab. He can take that 20,000 shares, put them up for sale for some gambler who thinks Rocket Lab is going to go from 28 to 36, which what is the math on that? 36 minus 28. That would be a 28% gain in 1 week, not in a month, in 1 week, after a 30% gain yesterday. So that would be a 58% gain in 2 weeks. Someone's willing to pay 37 cents for that. And on his 20,000 shares, he can make an extra 7,500 in a week. I mean, that is the beauty of selling options, bro. Because if you're buying that option, then you're staying awake at night hoping to God Rocket Lab gets above 36. If you're selling that option, it's like, all right, it's probably not going to do that, and I'll collect your premium and I'll go about my life. And that is why I think it's such a strategic way. We'll talk more about it on Saturday, but that's why I think it's so beneficial to at least learn about the concept of selling options, especially if you already have a heavily concentrated portfolio with a lot of shares in 1 or 2 names. Rye says, I've been destroyed selling covered calls too many times. Yeah, I mean, look, if you sold covered calls when Rocket Lab was at 10, then you got destroyed. But I think it's also, you have to be logical, right? Like sometimes with Palantir, I don't think anyone could have predicted it. So Palantir, throw logic out the window. But realistically, the reason I have not been selling calls on Hood, and I've been very public about that, and I've literally, had debates with TJ on our Friday shows about that, is because I saw Hood going a lot higher than 20 when it was at 20. And my money was where my mouth was. And I was like, we should not limit our upside here. But now that Hood's at 50, although I see the upside, I don't think it's crazy to sell a covered call at 65 or $70 for next month. The premium's not going to be great, but like assuming Hood gets to 70 by next month, like, yeah, that's a tough ask. Could it happen? Sure. 70 by the end of the year, I think is very possible. By next week, next month is not so. But so logically, when a stock runs like crazy, then selling covered calls helps. But when you're in the middle of its growth curve, it's hard. Now, the $1 million question is, how do you know if it's in the middle of its growth curve or not? And I think that just comes down to how well do you know about the company? Because if you really know about the company, you know at $20, when Hood was 20, you do not sell that covered call. When Rocket Lab is $10, you do not sell that covered call. SoFi, I wouldn't sell covered calls at $20 on SoFi right now because the narrative is being changed. And it's getting really exciting to be inside of SoFi right now. But if SoFi was like $30, like, yeah, I would sell some covered calls because it's run up a ton. And I think that's the way you at least philosophically and practically justify it to yourself. Invest with me. Thank you for the $5 super chat. Got to add TSSI to the watch list with the new Stargate AI build out in Texas. TSSI is Dell's version of SMCI, 350 million market cap. It's also based out of Texas. All right, let's look at this one. This is interesting. I've never heard of this before. TSSI. Has anyone heard of this one? TSSI. This is a small cap. Oh, big warning right here. This is a small cap. This is not a big name. This is the first time I'm hearing about this. $350 million market cap, up 16% on the day, likely because of the Stargate announcement. And someone's saying right here that it is the Dell's version of SMCI, which is funny because Dell is like a pseudo SMCI to NVIDIA. So it's like these guys are helping Dell build out the data centers that they're helping the hyperscalers build out in Texas. All right, this is one on the watch list. We got to look at this one. I've been holding TSSI since 210. Okay, so you've done very well. Let's did this stock move last year? I've never heard of this name, TSSI. This stock year to date is up 12%. Wow, holy crap. Dude, this thing is up 5,000% in the past year. Oh my. See, like there's some small caps that are scams and some small caps that are just like you stay away from. Then there's other small caps that potentially could be pivotal in AI CapEx data center build out. And if you knew about this in 2024 early, you've done very well. Wow, look at that. Dude, this was 27 cents February 2024. I mean, even if it got to $5, that's a pump. This thing just kept going, and the Stargate thing is taking it over the top. Wow, not bad. All right, congrats. We got into this one. Chris says he has this one, has major potential if they get a new client or more. Dell is their only client. I'll look into it. It's a small cap. I usually don't touch small caps, but if they're in the AI CapEx space, those small caps can become large caps, or at least mid caps, pretty soon if the demand is there. So I'll put that on the list. TSSI. We'll put that on the list. Yeah, also if a stock is overbought, covered calls is not horrible. It's just a challenge sometimes, right? Because people would say Palantir at 40, 50 was overbought, and then Palantir kept doing its thing. I think it's also the narrative, bro. Palantir just had S&P inclusion. The narrative was like the strongest it's ever been on Palantir. So at the time, selling covered calls on that didn't make sense either. Robinhood has potential S&P inclusion, which is why selling aggressive covered calls doesn't make a ton of sense. But super out of the money, I think, is not crazy weekly or a month out. But then here's the other thing. If you sell a covered call on a stock, you got to be okay with it leaving you, right? So if you buy Rocket Lab and you don't really care about Rocket Lab and you sell an aggressive covered call at 30 and you buy it at 28 and I don't know, you get $3-4 a premium and then it goes to 31, you can't be that scared of it being taken away because the whole point of selling an aggressive covered call was because you're literally just looking for the income. So I think sometimes people freak out if you know their shares get taken away. It's like, well, did you want to keep the shares in the first place? Because then you can't be selling that aggressive against a strike, especially if it's like a really good company that's firing on many cylinders. Insiders just bought a lot on TSSI. Can we see that? Can we see if they bought? Let's see. That is, you know, insiders buying. If they are buying at these prices, I got to check that out. TSSI FinWiz. Let's see if we get there. That would be interesting if the insiders are buying at this $10 to $15 range. They might think Stargate could be a catalyst for them. What do you think about Big Bear AI? I don't really know about their AI offerings. I know they changed their CEO and that's why it's pumping. It's up 0.64%. I don't know, bro. A lot of these AI names, unless they have to do with energy or CapEx, if they're pure software, I just go back to Palantir. I'm like, I'd rather have more Palantir. Like, I don't know. Is Big Bear AI going to take over the enterprise AI software world? You know, if you're buying it just to get it to pump on a short squeeze or something, that's different. But like a fundamental thesis, I haven't heard anything that exciting around Big Bear. I think they got a couple government contracts, but nothing too crazy. Fannie Mae has pumped. Yes, Fannie Mae has pumped. I think it's up like 100%. Bill Ackman pumped it over the past month as he's been talking about removing the conservatorship. So, I mean, look, those have done well. I think you can only buy it on Schwab and Fidelity. You can't buy it on Hood. But if you've been in Fannie Mae, Freddie Mac, you have done very well on those. It's not been bad. Rocket Lab is not getting destroyed. It was up 30% yesterday. That's why it's down 7% today. I would say that's just a normal retracement from its move yesterday. Palantir is above 76. Are we back there? Palantir, yeah, above 76. Palantir being very resilient today, dude. Very freaking resilient. Even Netflix, although it gave back 5%, still 965, huge. And the street all upgraded them to $1,000 a share. Pretty much every single big firm was like, yeah, we think this thing is going to 1,100, 1,200, or I think 1,300 was the highest price target I saw. Speaking of that, Netflix, let's get some coverage on that. Let's see some more updates on what the analysts are thinking about this one.
on a global basis is still fairly low based on the information that we have about how many broadband households there are globally. So to put that in some perspective, right now there are about 750 million broadband households worldwide, excluding the markets of China and Russia. And the company has 300 million subscribers at the moment, right? So in the US, the first market, the most successful market, about 2/3 of households have the Netflix service, whereas outside the US, only about 1/3 have the service. So we still see a lot of runway for member growth. And keep in mind, this company just grew their US households by another 4 to 5 million, a market that many people thought was already saturated.
Yeah, that was certainly something we'd anticipated some quarters ago. Is the pricing power there for the rest of the world? We know what we may be paying here in the U.S. What are we seeing in terms of average price around the rest of the world and how profitable those subs are?
Well, in aggregate, including the US and the worldwide subscribers, you're seeing both pricing power and profit expansion. So when you look at the average revenue per user, it's going up across the board, and you see the company able to take price increases in a number of markets. Last night, they announced that they were taking price increases in several markets, including the US. So you're seeing that come up on average across the board. And of course, the profit margins continue to expand. They're going to approach 30% operating profit margin. The guidance is 29% for the year. That's an upward revision as well. So you're seeing both of those things. Now, to get a little more to the point, as you expand your subscriber base in lower price markets, your average revenue per user across the entire base does take some pressure, but that's a really good problem to have when you think about both the pricing power in those markets and the number of subscribers you're adding. And of course, we haven't talked about it yet, but the fact that they've added advertising as a significant part of their growth paradigm is just a great part of the story.
Yeah, we talked a bit about the doubling and the doubling that's going to happen again on that front, Michael. I wonder where you think pricing hits a ceiling in that it might stimulate some churn. Are we anywhere near that?
I don't think so, frankly. When you look at how much engagement the platform has, which is 2 hours a day per household, and a number that continues to grow, the company right now is about 8.5% of TV timeshare and growing, right? So less than 10% of TV timeshare hit a new record in December as that grows, and a price point that is still well below that benchmark that is the bundle. We think they still have pricing power. The introduction of advertising as a way for consumers to compensate the company just gives more choice to the consumer as to how they want to engage with the platform. So really, you've given the consumer different options for how to spend time and how to compensate the platform. And we think that they will continue to have pricing power. Right now, it's going to be about digesting these price increases that they just announced.
Yeah, I mean, it may have the effect of pushing people to the ad tier. You mentioned it. What are your expectations there? They continue to sort of talk about it as modest now, but with grand ambitions.
We have really big expectations for the advertising tier, to be honest with you. So to put that in perspective, we estimate that advertising is a mid-single-digit percentage of revenue for the company, about 5 or 6% in the coming year. But it's a very large part of the growth. We think it could be as much as a third of the revenue growth for the business in the coming year. And that comes from both those consumers who have taken the advertising supported tier and who engage with the service at very similar levels to those who take the ad-free tier. But it's also these live programs that go across the entire subscriber base, even those that are premium and ad-free subscribers on most programming. They do see advertisements on live programming like the NFL, like WWE, and these are all expanding that revenue source for the business. And right now, the high watermark in the industry is Hulu with respect to how much ad revenue they generate, about $3 billion annually. I think Netflix is exceeding $1 billion, and I think that $3 billion will not be a ceiling for the company. I think they'll be able to grow through that number over time.
You know, the best parlor game over.
Wow. I mean, the street is pretty damn bullish. One of these firms said, Jeffrey said Q4 results were near flawless on Netflix. Not many times a bank says it's flawless. I mean, like, that is incredible. Bank of America 1175, Jefferies 1200, Morgan Stanley 1150, Oppenheimer 1150, TD Cowen 1150, JP Morgan 1150, Piper Sandler 1100, Goldman Sachs 960, KeyBank 1100. So 1200 is the street high from Jefferies, and the rest of the street continues to get them into that $1,000 range. Palantir right here, 76, NVIDIA 145.9, Tesla 421. Yeah, I mean, pretty much a kind of not a crazy day. I mean, Bitcoin's chilling out at 103. IBKR, nice outperformance on their earnings. I mean, that's really good indication for Robinhood as well. They're up 8.43%. Apple continues to be flat. MicroStrategy down a little bit. Some stocks green, some stocks red. Not seeing a big trend in anything. The S&P and the Qs are relatively green on the day, up almost 1%, which is nice. And other stocks are kind of following them. And you got other stocks that are not following them. But the big ones like NVIDIA and ARM, etc. Basically, I would say today is the response to the Stargate announcement. And your classic hyperscalers and semis are responding to it, large caps, etc. And then you have some individual stocks that are doing very well on different catalysts. But besides that, nothing too crazy today. And that's pretty much what we get. 10-year is going up a little bit. I did see that. 10-year 4.6. We're back up there a little bit. Maybe some rumors of tariffs getting back into the ears of the market. That could be one of the reasons. The mortgage rate was down today, 7.02 versus 7.09. So it's not down a lot, but it is down, which is nice. South Africa inflation below 3%. That's very nice to see. We saw Canada come down yesterday. So a little bit more of the international global inflation coming down is not bad. And then you have natural gas prices that were up a little bit today. Oil prices in general were down. Natural gas is kind of on an island in terms of how much it's gone up. But oil has been steadily coming down from that 78 high from a couple days ago. Amit, how much are you in cash now after your buys? That's a good question. Let me do the math. So after the buys for today and yesterday, I am in 15% cash. It's like a 14.2 or whatever, but 15% cash. So we're at 15%. We were at 30% in January after selling the HOOD options. So basically half of that cash has been deployed, which I think is fair. I think we got a lot of CPI was a tailwind. Trump inauguration, tailwind, could have went the other way. So far has gone good. Maybe it does go the other way. We'll see. And then tech earnings so far have been great. The banks crushed it. So deployed half of that cash. We still got half on the sidelines, and then we wait. It's different from 2024 where it was completely all in constantly. So now with this 15%, whenever it's time to deploy, I think everyone was waiting for that nasty 10% dip, S&P to 550, Tesla to 350, Meta to call it 520, Google to 170, 165. That dip just hasn't happened. It just hasn't happened. And because of that, if it hasn't happened, then I don't know if it's going to happen. I would say historically, the trajectory of the market is that you'd get a 10% dip eventually. But that has not happened yet. That cash is not going to be for my tax. So I have a plan to pay my taxes. I'm going to be selling my HOOD options that have really got in the money. I mean, I showed this the other day. I might as well just show it right now. But I need cash for taxes, and I need cash for freaking funding my solo 401k. So I think after earnings, hopefully we get a good gap up to 55 on HOOD if the results are really good. I'll be letting go of these. So these are the last tranche of options. They're up 460%. Total value is 155,000. We're up 130,000 on the position. We put in 27,000, and currently it's worth 150. I think I'm going to be letting go of this. If I can get close to 151, the max value that I can get from this contract is 175. I do not feel like waiting another 9 months to try to get to 175. If they can give me 145 to 150 after HOOD earnings, so talk about end of February, I'm taking those profits. And with these profits, I don't have to touch my cash because I can pay off my taxes. I can fund my solo 401k because I'm going to need at least 25 to 30 grand for that. And then the rest of it, I'm going to just sell options on it, probably on HOOD, sell puts on HOOD, and just rake in the option premium. But I'd rather not wait until January 2026, even if it's for the taxes, because I'll be able to resolve that just to take profits on these. So these are the final tranche of options. The first one was the ones expiring in 2025. These are going to be expiring 2026. But look, Hood's at 50.75. Again, the strikes on these were $20. So they're in the money. It's a spread. And because it's a spread, the time value needs to decay. And we still have 9 months left basically a year left on the contract. So that's why I'm going to wait till end of February. We'll have less than a year left. And if Hood can really have a good push off earnings, by the way, Hood might crash on earnings. This might be a great pre-earnings pump. And then Hood crashes all the way back down to 40 if the street doesn't like it. That could also happen. I'm ready for that. But if that doesn't happen, I think that's where we take the biggest profits of the year. And then we deploy the rest of that cash. So that's my plan for paying the taxes, because I got to need something to pay the damn taxes. Chris says, look at Trump's Russia tweet. Did Trump just tweet about Russia? Oh boy. We are back to 2017, folks. Trump tweets, the market reacts. What did he say? What did Trump say? What did Trump say about Russia? Let's see. He had to say something about energy. That's probably why natural gas is up right now. Oh, it's not on his tweet. Is it on Truth Social, Chris? Is it on Truth Social? It might be on Truth Social. It might be on that. Let me see. Oh, yeah. Okay, here's what Trump says. Here we go. You guys ready? I'm not looking to hurt Russia. I love the Russian people and always have had a very good relationship with President Putin. And this despite the radical left's Russia hoax. We must never forget that Russia helped us win the Second World War, losing almost 60 million lives in the process. All that being said, I'm going to do Russia, whose economy is failing, and President Putin a very big favor. Favor with all caps. Settle now and stop this ridiculous war. It's only going to get worse. If we don't make a deal, and soon, I have no other choice but to put high levels of taxes, tariffs, and sanctions on anything being sold by Russia to the United States and various other participating countries. That's why the 10-year is up right now. That is why the freaking 10-year. See, Trump keeps saying stuff like this. Those Hood options are not going to be as easy to sell because this macro might not be in the best spot. He then says, let's get this war, which never would have started if I were president, over with. We can do it the easy way or the hard way, and make the easy way is always better. It's time to make a deal. No more lives should be lost. All right. Well, either Putin's going to like that or Putin's not going to like that. And either Putin's going to appreciate that or he's not going to want to talk. Now, granted, Putin and Xi Jinping, have you guys seen this video? Putin and Xi Jinping, it's a small video. There's no audio here, but it's a video of them on a conference call, Putin and Xi. And what they said in this call was, we agreed to pursue mutually beneficial and mutually respectful relations with the U.S. contingent on Trump's genuine interest. That was like 2 days ago. Or sorry, yesterday, January 21st. So maybe Trump's doing this tweet as a way to like harp on the idea that Putin already said he wants to work with him. Maybe he ends up actually working with him in a way, and they get this war over with, which I think would be very, very bullish for the broader markets, even if the 10-year spiking on that news in the short term. Okay, Sam Altman just responded to Elon. Elon said SoftBank has well under 10 billion secured. I have that on good authority. Sam Altman says wrong, as you surely know. Want to come visit the first site already underway? This is great for the country. I realize what is great for the country isn't always what's optimal for your companies, but in your new role, I hope you'll mostly put America first. Wow. Guys, I mean, you could hate Sam Altman, but that's a good response. That's a good response. You could think Sam Altman's a slime ball all you want, but he's getting a lot of brownie points right there because he's basically calling out Elon saying, hey, you're the whole America first guy. This is great for the country. This is good for America. So I would hope you would think that it's good for America. This is absolutely a good response just from a public relations perspective. Even if people don't believe him or trust him, he is playing the America card here, which makes sense because Elon's been playing the America first card for the past year. So there you go. It doesn't matter if Elon's been on the Trump train. It doesn't matter. Like Trump was with Sam Altman at a press conference yesterday talking about AI investment. And I think the thing that's rubbing people off the wrong way is like, why is Elon underpinning this whole Stargate project if it's good for America? Because it's a win for Trump. Like Elon being bearish against this Stargate thing is actually not good for Trump because Trump wants to get the credit for $500 billion of money flowing into the economy. And Elon saying $500 billion doesn't even exist because SoftBank doesn't have the money. That's not good for Trump's political capital if this deal never happens. Because then it was just a hodgepodge of a press conference that wasn't rooted in reality. So I think Sam Altman's getting the one up here, at least on that response. But in general, most people still don't trust Sam Altman at all, ever since he basically turned a nonprofit into a for-profit. And I get why Elon hates him. Like, I get it. Elon put the seed money into the nonprofit that ended up becoming a profit. Like, I get Elon's perspective. It's just still, in that exchange, it looks like Sam's coming on top. Wow, Robinhood, 50.77. I'll check resistance again at 51. It's being a little tough to get over 51, but it's not a ton of shares. Last time I checked, it was like 6,000. 51 now has, 7,000, bro. There's no wall. There's no wall at 51. 7,340. There's no wall for 51. Kris said billionaires competing to make America better. Love it. Yeah, I mean, honestly, that is what's happening. The consumer wins at the end of the day, right? Tesla's trying to build up XAI. OpenAI is trying to build up their clusters. All of them are paying NVIDIA. NVIDIA is great for people that are investing in NVIDIA. NVIDIA is great for the employees, for the shareholders, for the overall investments NVIDIA can make into other startups. Like, all of this ends up being simultaneous together in terms of the synchronicities attached to how the broader CapEx data center AI build out helps the United States. And then long term, regardless of XAI wins or if OpenAI wins, America wins, and America needs to win against China when it comes to the AI revolution. So it is bullish long-term America at the end of the day. I want a Keeping Up with the Kardashians type of show, but with US billionaires. That's actually a great idea. Yo, Netflix, if Netflix does something like that, I'll finally start watching Netflix, bro. I will start watching Netflix. If they make something like that, we need like a Silicon Valley, but for like cutthroat tech billionaires. Silicon Valley on HBO was one of their best shows ever. That was a great show. We need something similar for people running a public company, dude. Because I'm sure the challenges of running a public company, especially when it's worth like $1 trillion, has to be different than running a startup. But then again, those people don't give the media that much insight because it's a public company, So that would be a really cool series, though. How are people still responding to SoFi bear analyst rubbish? I agree. The SoFi bear analysts have been relatively incorrect for a long time. So now, granted, that's good. That's created sentiment to get to such a low level that it allowed SoFi to outperform. I don't know why it's down 3% today. Does anyone have an idea? Was there any bearish report on SoFi this morning? That's weird. After the strength it had yesterday, I mean, I know it had a big 10% day, but oh, Compass Point. Compass Point said sell. Compass Point Research said sell. Wow, price target of 6. Holy crap. There you go. That's why it's down freaking 3%. I don't know if anyone has the report on this. I don't see the report yet. They raised it from 4 to 6. Dude, this is why Noto needs one of those earnings, bro. This is why Noto needs one of those earnings. It is normal. I agree, Mark. It is normal. It's a 10% day, a pullback is normal. It's just there was so much strength yesterday that you would think the strength could continue because there wasn't a catalyst to not continue the strength outside of people taking profits. But then again, you ask yourself, why would people take profits into this type of strength when the narrative's changing, all that stuff? And then there's your catalyst, $6 price target by Compass Point. That'll get people to easily be like, all right, we'll take some profits here. We need a good earnings by Noto. He needs one of those earnings that really puts his foot down and says, we are here to stay. Also, Noto has his PSUs at 25, 35, 45. So he is heavily motivated to get this to happen. It's just a question of if they can guide for it going into Q1 and then overall going into 2025. All right, folks, I think that's it. I think that is it for today. We are ending just over 3 hours on the stream, 3 hours and 8 minutes. Fun day. S&P is green. Look, do we need to get a massive retracement? I would say 2 weeks ago, there were many catalysts to get a retracement. Bad earnings, bad CPI, and then Trump volatility. Trump volatility will probably still be in the mix, especially with what he just said about Russia. But it's really hard. And Jason was talking about it yesterday from a technical perspective. It's really hard to be short right now. And it's really hard to be bearish. The word of the week last week for him was trappy, because maybe it was a bull trap, bear trap. Now we're out of that word. And he says the word of the day is choppy, which I think is a really good description of it. It's going to be choppy. It's not like we're just going to go in a straight line up. But the idea that you're going to get trapped buying some of these stocks at these levels, some of them, sure. You know, maybe Rocket Lab goes down 30% because it didn't deserve to go up 30%. Maybe SoFi goes back to 14 because it never deserved to run to 17. I think earnings will designate if those runs were justified, which we're going to find out pretty soon. I think the earnings are going to be pretty good for both of those companies. But I don't think it's one of those things where you're buying it, the valuation's egregious, market sentiment is crazy, and there's no macro catalyst to support buying equities at these levels. Because earnings catalysts are massive with the banks and Netflix yesterday, and United Airlines, Delta, et cetera. And then CPI is headed in the right direction, along with Japan raising rates, which gets the dollar down, which is good for the 10-year. I mean, I do think the macro catalysts are pretty damn strong. So Archer back over 10 as well. Yeah, and some of these spec plays. Now, look, one thing to combat some of my bullishness, because I try to definitely give the bear case as well. The Trump meme coin to me is pure froth, right? It is pure froth, and that means there is a lot of money on the sidelines. Having said that, there's $7 trillion on the sidelines because they were scared for the past 2 years. So although I don't love the meme coins, and I've never been a fan of fart coin and all this stuff, the fact that money's able to go into it means that people have enough money on the sidelines and they're ready to deploy, which might not be a question of froth. It might be more so a question of so much excess cash is sitting on the sidelines and so much excess profits were taken over the past year that people are ready to redeploy into the equity markets and into crypto. And that's probably why we're seeing this, which is more bullish to me than bearish, even if I'm not a fan of meme coins in general. Yeah, and record high on IBKR margin. Record high. I think they said it was 45 billion is their margin balance on IBKR. Let's end with that interview. I think that's a good interview because this is someone who's a CEO leading the space, and the space is something that we're all interested in, which is investing. He's a little bit cautious about the crypto stuff, but let's watch that, then we'll get out of here. Overall, he was pretty damn bullish, bro, and he thinks this thing is not stopping. And if you watch his interview last quarter, he was actually much more scared. He was like kind of reserved in his comments because this was just a lot of momentum. But I think after all this macro data, after some of these earnings results, he's more so on the idea that this is indeed a bull market.
On CNBC ahead of the earnings call is Interactive Brokers founder and chairman Thomas Petterfy. Thomas, good to see you. Thanks for the time. So stocks higher after hours. Looks like a strong quarter. Tell me, what sort of trading behavior do you see? How do you feel about the overall health of this environment based on that?
Everybody seems to be incredibly optimistic. All of our metrics are up by 30% or more. So it was a fantastic quarter, and it looks like the momentum is going to continue into the coming quarter also. So free market capitalism, the idea seems to be taking hold all over the globe. Everybody wants to invest in the United States. People are enthusiastic. Money is pouring in. So there is absolutely not one cloud on the horizon.
Now, I remember about a year ago, you were maybe a little queasy about the level of margin trading that you were seeing. And we've certainly seen an explosion in interest in what some might term riskier assets, even with the new president's name on them when it comes to crypto. How are you feeling about the level of margin trading that you're seeing and the activity in the riskier assets now?
You're absolutely right. Margins, unfortunately, are up every day. Today is the highest level of margin we have ever had. And you are correct in saying that the crypto area is difficult because it's based on nothing. It's just hot air. But, as long as everything is working, it will continue to work.
So in light of that, what are you seeing in terms of that type of activity on Interactive Brokers? I mean, today we got the acting SEC chair announcing the standing up of a crypto task force. We're seeing Bitcoin trading right near record highs, and there's this expectation that this asset class is going to see further validation from this administration.
Well, it would be very good if they put some rules around it, yes, and that could stabilize the situation. I think at this moment it is very iffy.
We're talking about animal spirits here, and it certainly seems like investor confidence is higher, particularly post-inauguration yesterday. CEO confidence is higher right now. In one area in particular, you're really seeing it play out is the financial sector. And we talked about how the stage was set last week with the big banks with reporting their earnings, but this expectation around deregulation and the activity that's going to be unleashed in financial services, how do you see it, and what does that mean for Interactive Brokers?
As I said, it's free market capitalism all over. So it is, everybody is extremely enthusiastic. Money is coming in from all corners of the world. Everybody wants to invest in the United States. People want to come here and work, but they may not be able to do that, but they are certainly able to invest here. And Interactive Brokers is the firm that they usually choose to invest in.
So I got to call this out again, Thomas, as good as all these numbers are and as excited as so many market participants seem to be, you seem to be a little torn here. Is it the line between confidence and recklessness? Are you sensing perhaps what you might be concerned is recklessness in this activity as you talk about the need for some rules around some of these assets and how much people are rushing in?
Well, I am worried, to tell you frankly, I'm worried about the crypto area, but everything else seems just very good to me. Crypto could be an issue. But I think even if that were to collapse, we would survive it and we could do very, very well.
So he says he is concerned about crypto, which is fair. I mean, look, when you see meme coins getting launched, you feel there is some extra froth in the system. Nonetheless, BlackRock, the White House, the crypto task force that the SEC created yesterday, there are a lot of catalysts for crypto in and of itself. But he says, I'm afraid about crypto, but everything else seems fine. And then the question becomes, okay, if crypto collapses, let's say Bitcoin goes to what Tom Lee thinks it could get to, which is like 60K. Does the entire market collapse with it? Does the NASDAQ get back down to 480, right? Does it take Tesla down 30%? Like, I don't know. If Bitcoin actually falls from 100 to 60, I don't know if that means the entire market falls with it, because that could be a crypto thing in and of itself. Now, granted, historically, when crypto falls, we do see the broader NASDAQ fall, tech falls with crypto. I mean, they both kind of move with each other. So as long as tech holds up, I could imagine that crypto has the ability to hold up, especially with rates coming down and liquidity increasing. But you see from IBKR, he's pretty bullish about clients continuing to trade on the platform and use the services of IBKR, even if he is concerned a little bit more about crypto, which is fair. SPX is at all-time high. Let me check right now. XPX stock. Yeah, we are at all-time. You're right. SPY is the ETF. That's not at all-time high, but SPX is. There you go. 6,009 on the SPX. All-time high. Year to date, we're up 3.9%, which is not bad, bro. Up 4%. When the S&P usually averages like 8% a year, even though the last 2 years were 20%. Up 4% for the year. For the past year, it's up 25%. And today, it's up almost 1%. So all-time high officially on the S&P 500, which is not too bad. Now, one thing to maybe hamper the amount of deploying of capital is fear and greed. So we were at extreme fear 2 weeks ago. We were at fear last week. We are back in neutral. Greed is when you kind of definitely don't want to be buying anything, and maybe extreme greed is when you want to be selling stuff. Neutral is still, all right, kind of show me if this could play out, and big tech earnings are going to have to show us, not tell us, if we can still get some momentum. As we get closer to greed, I think that's when things, get a little bit up there. Extreme greed is like, all right, now we are definitely there. But so far we're still in neutral, which is not too bad at these levels. All right, cool. There we go. Let's get our word of the day, and then we are out of here for today. Another 3-hour, 20-minute stream, baby. We're doing these. It's 3 hours every day. 3 hours every single day. This is going to be a hard word to pronounce already. Delightcent? Delicescent? You guys can't knock me on this. This one feels like this is a hard word. Delicescent. Delicescent. That's what I'm going with.
Delicescent.
Delicescent. Oh, the I should have seen that. The Okay. Concealed, hidden, or latent. A significant part of the human creativity stems from our delicescent thoughts. The family found refuge in a delicescent. How do you say this thing, bro?
Delicescent.
Delicescent village far from the city noise. Delicescent, hidden. Delicescent. This word sucks. We got to get a new word. This word is so boring. Let's do Merriam-Webster. Merriam-Webster usually has a good one. Sounds like a deli, right? Yeah, great place to make a sandwich. Sounds like a deli. Okay, I think I know this word. You guys probably know this word as well. Opine. Opine. To express an opinion about something.
Opine.
There you go. Opine. I think every day on the show, I opine about a variety of topics, but hopefully we add a ton of data to help us, or to help myself opine some opinions on the broader markets and where they are going. The delicescent deli across the street is delicious. That was a good one. That was a good one. I still do not have the clip of mispronouncing words yet. We got to put that together. We got to find a way to put that together. If only you added these words to your vocabulary. See, the problem is I forget about the word of the day the next day, every day. Like if you ask me what was yesterday's word of the day, I can't tell you. I legit can't tell you. I really don't know. Who remembers yesterday's word of the day? Put it in the chat. Who remembers? Bitcoin 104, getting a little bit of a bid right there. I literally, like, it's hard to remember every single word of the day. But I need to start using it a lot more in the day-to-day vocabulary. There's one word I'll never forget about: Byzantine or Byzantine. That word, you guys know my history with that word. I love that word so much. It's like the first big word I ever learned. But outside of that, I forget all these words. See, none of you guys remember. No one in the chat is putting in what the word was from yesterday because you guys don't remember. It's like we look at it for 5 seconds and then it just disappears from us forever. Rocket Lab was the word of the day yesterday. Correct. Rocket Lab was the word of the day. Jibe was from a few days ago, even though it's spelled, we thought it was spelled jive, but it's spelled jibe. That's from last week. That was a different one. All right, that's it. Thank you, everybody. It's because you mispronounced it. Yes, exactly. Exactly. All right, thank you, everybody. We'll be back 3:45. Don't have any big earnings today after the bell. We'll see how this market turns out for the second day underneath the Trump administration. But that's it for us today. All right. Thank you, everybody. I'll see you guys on the market close. Bye, everyone.